All right. Hello, everybody. Welcome back to the channel. We are officially here for Palantir's Q4 2025 earnings. I'm here. Amir is here. Arnie will be here soon. We have another Palantir OG.
Hello, everybody.
Davis is here
it's
as
time. Palantir earnings.
Are you excited?
Of course.
I
schedule these things. My schedule is worked around Palantir earnings.
He's been in the stock since $7-8, and it's kind of crazy, right? Because these earnings for the past 4 years have been like big events. This one's also going to be a big one as well. Things have changed since the past 4 years, but it should be a fun one.
Yeah. Daddy Carp's going to pull through as he always does.
That would also be nice for him to pull through. All right.
Have fun, bro.
Yep. See you later. All right, let's get started with some of this coverage. Amir, thank you for being here with me. Arnie will be here soon. It is Q4 2025 earnings. It has been a while, 90 days to be exact, since we have had these earnings. Amir, how are you feeling going into this?
Man, I am excited. As Davis mentioned, these things are an event, and you kind of like drop everything you're doing. I mean, it's 5:30 a.m. in Japan here, so yeah, very excited for these earnings, which I think will be banger. I like. There's a hint in the guidance that they're gonna crush earnings, but Wall Street doesn't seem to have picked up on it. So, very confident that we'll post good numbers. As for what the stock does, well, who knows? It's been beaten down pretty heavily as of late here.
Yeah, and we'll we have about 20 minutes until the earnings, so we'll talk about kind of what has happened to the stock price and some of the things, Amir, you're looking for in guidance. Thank you, everyone, as well, for being here today. Bsov, Melanie, thank you all for being here. We did have the New York meetup over the weekend yesterday, so appreciate all the people that showed up to that New York meetup. A lot of you guys were OG Palantir, and once again, I was reminded how much this company has changed so many of our collective lives. So really appreciate it. I'll talk more about the meetup tomorrow. Didn't do the morning open today because kind of lost my voice from last night, but very happy to be there, and obviously could not miss Palantir earnings. This is going to be a big one because this is the first earnings that really the stock has not really cooperated going into the print. We're down 12% year to date, which is not that crazy given Palantir is up more than 20x from the absolute lows. But obviously a lot of people bought it in the 170s and 180s, and it has not really performed as well. So Amir, how are you thinking about sentiment around the stock going into the print? Do you actually think it's good that we're not running into the print like we did last time? Last time we had $200 before we had the earnings. And overall, how do you think the stock could react if we get some really good numbers?
Well, honestly, I wonder if it's Palantir related at all. I feel like similar names have been pretty beaten down this year. I mean, there's this like shift in where they think value is going to be created, which we all know that Palantir, as the orchestration layer, that's where the value is, but the market doesn't seem to understand that. So a lot of software names have taken a beating. So I haven't seen anything like relating to Palantir specifically, which would be like that would deserve the stock to be punished. So you that cover the markets day to day maybe have some more insight, but it doesn't feel like Palantir in particular is being punished. It feels like adjacent things in the market are being punished as a whole. The markets are rallying to new all-time highs, but it's like driven by very specific companies rather than I'm sure most people in the chat here are feeling pain in their portfolios despite the markets reaching new all-time highs recently. So yeah, it doesn't feel like that it's Palantir related specifically to me, but I'm curious about your thoughts on it.
No, I 100% agree. There has been nothing, I think, over the past 30 days that has been Palantir specific to cause the stock to fundamentally do a re-rating. Obviously, there's been a lot of controversy with Palantir and governmental agencies they work with, protests, et cetera, et cetera. I don't think millions of retail investors or hedge funds woke up one day and said, I'm going to be selling Palantir because of this, because if you bought Palantir, you already knew they were associated with many of these different things that governments do. So from that perspective, I don't think that's the big reason, even though some people have that perception. Software is going through a renaissance of change. And, the one thing that's hard to ignore here is that I looked at Microsoft today. Obviously, they had amazing earnings. Stocks back at 424. It kind of bottomed around 421 last week. They took Microsoft down $400 billion off a 2% miss on cloud revenue and a little bit of an increase in CapEx. I mean, the problem is we all have to be honest with ourselves. If they're going to take Microsoft down 10%, then if Palantir does put up really good numbers, it might not matter if Microsoft, which put up some of the best earnings we've ever seen, also got hit. Now, Palantir is going a lot faster than Microsoft. There's a lot of different nuances between Palantir's growth curve, especially on their operating margins. And they could really blow it out of the water, especially on guidance, which we'll talk about, which could, I think, re-rate the stock back to the upside. But the problem is with all these SaaS names that have taken a hit, at the end of the day, Palantir is a SaaS. One of the reasons Palantir has outperformed all the other SaaS names is because they are actually growing with the tailwind of AI at a level that is only comparable to NVIDIA in terms of 60% growth rates. But at the end of the day, it's in that software sector. So I really do wonder today, do they have an amazing earnings and the software names themselves is what takes it down? Or can they put up such unbelievable numbers to the point where the street's like, all right, we're going to sell the other software names, but we cannot sell Palantir?
Yeah, I think about Microsoft, isn't it specifically relating to open AI fears? How much of their commitments are open AI specifically, and people are doubting open AI as a whole. We had all these new all this new progress in LLMs, from Gemini, starting to take market share. We have Claude absolutely dominating, Claude pushing out a proper, Excel add-in when Copilot doesn't, work at all. And then they're like, yeah, here's a translator that no one asked for. So I think it's more about OpenAI being weak than, Microsoft as a whole. So I think that one specifically, even though it's like 400 billion is like outrageous to drop, but yeah, I think that one actually had bad news. I don't think like Palantir has had any bad news for like 2 years. That's why it's ran up so much, but it is a volatile stock. It does go up and down, so we'll see. If I had to guess, I think they're gonna post banger numbers. I mean, the analysts are finally coming around. I just saw that Louis De Palma, for the first time actually is bullish on the name, so hell is freezing over, and interesting things are happening, on the analyst side. So I don't know. If I had to guess, I think it might go up, but who knows? People in the chat want to know our predictions as always. So I think we're gonna post banger earnings, and I think that the stock will go up. But who knows? I mean, it's a stock market, and it's a very unpredictable time in the stock market in particular right now. So anything can happen, really.
Well, this is pretty incredible. So if anyone has kept up with the Palantir story over the past couple of years, analyst Louis De Palma from William Blair, I mean, he has not been a fan of Palantir. Let's just say that when this stock was $10, $15, $20, he was still not a fan of Palantir. And particularly, he was not a fan because he thought their government growth would actually deaccelerate over the past couple of years. It has been anything but that. He has a price target today of $200, which is about 40% upside from here. He went from market perform to outperform, and he expects operating margins to increase from 50%, which are already crazy for any company, much less an AI company, to 65% over the next 5 years, and forecast the company will generate at least $7 billion in free cash flow by 2030, reflecting sustained revenue growth and continued margin expansion potential. I think the two words that have defined Palantir's run over the past couple of years, realistically, is margin expansion. And, the numbers they put up last quarter were just phenomenal. If they could top those numbers and even guide for numbers that are higher than that, yes, the name has a premium built into it, but there's just no other software company that's doing that, or AI company that's doing that. So I think it would
Let me show this chart real quick if we have time. So it's very interesting that we're talking about. So what we're looking at here, I'll do the quarterly. I haven't, ignore Q4 here. We don't have Q4 results. But as you can see, the revenue is going up exponentially. But if you look at R&D costs, they're static. And that's why you have people like Louis De Palma coming out and being like, well, operating margins can reach, 50, 60%, because, the operating expenses are not really moving up for Palantir. I mean, they are executing, they are firing people, like they are cutting headcount, like they are decreasing operating expenses, and the revenue is just not stopping. And we know how sticky the revenue is. We know that the net dollar retention is climbing higher. People are extracting more and more value, paying more and more for Palantir. So that's why you see this relation where people expect this massive margin expansion, while also, growth just continues to escalate and, grow faster and faster. And given the net dollar retention, how, current customers are paying more for Palantir each passing quarter than they did the quarter before. That's why I think the growth will be sustainable, and that's why I think that operating margins will just keep climbing. And who's to say that 60% is where it stops? Like we don't really see where it will stop. It's just so impressive, and this is one of the few companies in the market that can grow both top and bottom line in an exponential nature, and that's what makes Palantir so special in the world of finance and the world of SaaS. Really, it's crazy.
Yeah, and pretty much every analyst upgrade over the past couple of weeks now have been in that 200, 230 range. We had some initiations of coverage because even a lot of these analysts that are recognizing that the valuation is aggressive are also recognizing the valuation deserves to be aggressive and the valuation deserves to expand if Palantir, which is again a one company that low headcount, increased operating margins, scale top line revenue growth above 50%. If they can do that for the next 5-7 years, which they have 900 customers. I mean, one day that'll be 9,000 customers. It is not crazy to see them doing that. And then we get into the qualitative elements of how special their moat is, how much government revenue they have, how unreplaceable their software is. That is the reason the stock is traded at a premium. And if they can get rid of the software SaaS bad sentiment, which is more of a macro thing versus a Palantir thing today by having even better numbers, along with Carp's energy, this is another reason people really care about this company. I think that would be really important. What did you see in the guidance that you thought was potentially going to surprise the street?
Yeah, so they guided for 4.4 billion, and simultaneously they guided for 1.43 billion in US commercial specifically. And if you put those two together and then you just you look at how much is government these past couple of quarters, how much is commercial. So there's pretty much a 53% government, 47% commercial. So if you put the guidance together and you have a similar mix, it would mean that non-US commercial would tank like 25-30%, and that government would slow down significantly. So just that US commercial guidance, if you assume the same revenue mix, it doesn't make any sense at all. That means that the overall revenue will be way above 4.4 billion, because it doesn't make any sense putting these two numbers together. Like mathematically it's completely detached from reality, because we know that government is growing. We had Palantir executives going out saying like, we're doing more this year under Trump than we did under 4 years under Biden. Everything is coming together on the government side. And we know, with the tensions globally that, they have been growing both internationally and in the US, really quickly. And then you're like, 1.43 in US commercial only with 4.4 billion. It doesn't make any sense. So that's why I think that at least for 4.5, but I would not be surprised if they do 4.6 or 4.7. And Wall Street, in typical Wall Street fashion, they took the easy route out. So I think Wall Street consensus is 4.4 billion. So that's why I think it's going to be a massive beat for this quarter, because just the guidance just hints at we're gonna blow these numbers out of the park. So that's
the crazy thing is Carp guided for 4.5 billion of revenue 3 years ago by 2025. All of us remember, and it looked like it was going to be hard to get there, and now it looks like we're definitely beating that today.
Yeah, I was gonna say that as Carp prophesies, in that CNBC interview, so many golden quotes whenever he goes on TV. But Palantir was decelerating. At one point they only grew 13% year over year. I think that was in Q2 of 2023, just when they launched AIP. Sentiment was an all-time low when they launched AIP. But if you bought at the bottom there, you've done pretty well with the stock price. But he said 4.5 billion at the time. We were like, I don't know, how is he gonna reach 4.5 billion? Here we are. Carp did it. Trust in Papa Carp. Well, we don't know officially that he did it, but I'm pretty sure that they're gonna post 4.5, just given the guidance here. But as Carp prophesied.
Alvarez, thanks for the super chat. What margin do you think we need for Palantir to beat the rule of 40 of 112? I mean, I think they're going to get very close to that, if not slightly above that. Remember, the operating margin guidance from some of these analysts think it can go from 50 to 65 over the next few years, which is realistic. I mean, if it goes from 50 to 65 today, we would have like rule of 130 or something. So, Amir, any thoughts on what you think the margin needs to be for a good rule of 40?
Well, I'm expecting 70% year over year for the quarter. So on an adjusted basis, What did he say? Just add whatever to 70%.
Yeah, so if they did 50%, 70 plus 50 would be 120, right?
Yeah, I don't know if we're doing 120 rule of 40, but normal operating margins, I think I have them at 36% for the quarter, but I would not be surprised if they beat that, to be honest. But yeah, I mean, definitely around that 110 range.
Yeah.
What's more important for me is to see net dollar retention that has been climbing every single quarter since the launch of AIP. Because what that shows us is how sustainable the growth is. So when every customer is paying more each passing quarter than they did the year prior, that means that the revenue growth that we have been seeing is not about to stop at all. And if we look at contract balances, we don't have to get into all the numbers, but remaining performance obligations, billings, all of these things are going up. They're not slowing down. So growth should also keep accelerating, and that's crazy to say. I mean, for the quarter, I have US commercial doing 149% year over year. That is a crazy number to throw out there, like 150% year over year on US commercial. And the scary part is I don't see it slowing down. Like nothing is hinting that, we're gonna calm down here. No, everything is actually accelerating across the whole business. So I'm really excited about the net dollar retention number, and if that can approach that 140 mark, that would be insane. I have them doing 138, I think, for this quarter.
Let's bring on someone to the stream who has been an OG of this company, who has analyzed this company in a way that has really helped a lot of people over the past couple of years. Ladies and gentlemen, I know it's been a minute, but welcome, Arnaldo.
Yo, it has been a minute. It feels quite a long time we have not been talking together.
Yeah, I missed you guys. What happened? We haven't been seeing each other. I'm busy. Arnie on his, around the world trips. You guys never have time for me and for the chat anymore. Talk about Palantir.
Who cares of Emir?
The one thing, by the way, Amir also moved across the world, so he's forgetting that part. But the one thing that brings us together every 90 days is none other than Palantir. Arnie, what is your sentiment and thoughts going into this earnings that the stock is down 12% year to date?
I think we got traumatized last time because if we go back 3 months ago, we were just so close to getting the best results ever, probably listed in a public SaaS company. And probably that best definition, we remain best for a very long time. Despite that, the stock went down like 20%, 30% now or more from that moment. If we include the pre-market activity, the post-earnings activity, which was a super spike up, and then the stock down dramatically. I think after that, people are now scared of playing earnings, and which could be a reason why the stock is relatively down now, because at the end of the day, the option activity matters a lot into moving the price. So when people buy a lot of call options, there is a buying pressure from banks that need to hedge that short position on the calls that the clients have on the long side. So now we are seeing people are not actively betting on Palantir to be good, which intrinsically brings the probabilities of actually doing good on our side. And it's not only a market thing, is if we look closely of what happened during this quarter. As you may know, I like to track every quarter all the deals that happen. We saw some massive partnerships and deals. Just to mention one, which I erroneously forgot a zero here, but during the quarter, Palantir got a deal of $440 million with the US Army, Navy to provide ShipOS. That contract alone is enough to move the numbers. But then we got also $200 million with Lumen to support AI in complex multi-cloud environments. We got $100 million from the IRS, Then we got partnership with NVIDIA, with France Intelligence, admitting essentially, hey, we can't build our own solution, even if we are now buying solutions from our own domestic solutions. We don't care of Salesforce. France can't get rid of Palantir, even if we know for 4 years they're trying to get rid of it. So business-wise, I think we have never seen a company that has been this strong and never been this strong into this particular moment in time. And then if I have to speculate a little bit, I'm seeing some signals that from the eyes of someone who is not very much into the stock may seem like, oh, okay, just another analyst upgrade. But there are two people that we know literally missed entirely the Palantir story. And when the times were bad, to say the least, like they were awful, they were there trying to smash the company even more, trying to beat it with like crazy stupid targets like Palantir is a sell at $3, is a sell at $5, $6. And even when the results were clearly speaking, oh, this company is actually doing stuff well, they were insisting into this company sucks. And then, oh, this company is too expensive. But just last week and today, we saw these two analysts, one from Royal Bank of Canada and the other from Citibank, just uplifting their targets from being, oh, we dump this company to, hey, this company is going to outperform everything we believe is worth more than $200 per share. It's like, what? What have they seen?
Wait,
So,
did Rishi raise as well? I missed
yes,
that.
Rishi raised
Rishi
to 50.
went
I
To
believe.
50. Yeah, I was like, wait, the 200 for Rishi?
no. There was
His-
written.
This was his $5 target in March of 2024. And he kept that for a long time. So he just recently went up to 50, still underperformed. But the point is, I think Arnie's saying is that these analysts have to recognize there's something real here at this point.
No, sorry, guys. I think I saw literally today Rishi upgrade Palantir to overperformed.
That was Louis De Palma did that to 200.
No, not Rishi. Sorry, Louis Di Palma.
Yeah, we talked about that. And which he was not a fan of Palantir's growth on the government side in 2023. And now it's like that's a big story for Palantir.
Yeah, and you have to keep in mind that these analysts are like experts in their own domain, and Louis De Palma is like the government guy. So similar to Mariana, she is also like more on the government side. When those two are aligned, that means that government is about to print. And most of us, that are in Palantir, we've been very excited for government for a long time. But from the outside, people tend to be more interested in the commercial side of things. It's like, oh my God, commercial is going so fast. But we're like, oh, guys, slow down. The government is also booming. So when you have the two like government experts coming around and saying like, yeah, Palantir 200 plus, Mariana and Louis De Palma, that bodes very well for the government business moving forward here.
We have 5 minutes. Obviously, we're not talking a lot about the macro or the markets because this is a Palantir stream. So we're going to be pretty dedicated to Palantir today. I don't think there's any other major earnings as well, but we'll see if there's any headlines after hours that could affect Palantir. Just real quick, what are you guys thinking about stock price action if we were to see some downside momentum? I mean, obviously, a lot of us that have been early in this name and have held the name have held through the volatility, but also we recognize the reason it gave us such asymmetric gains is because of the premium on the opportunity. But in the stock market, those premiums can compress. That doesn't necessarily change a thesis. So, I mean, Arnie, if the stock were to go up 10% or down 10%, how are you thinking of it?
Down 10%, I personally find it very hard. Obviously, if that would be deserved or not will depend on the results, because personally, I expect results to be not only very strong, but also beyond the expectations. Hard to say the degree of which beyond the expectations, but one thing we should keep in mind is last quarter, Palantir grew more or less 60%, and they guided for this quarter again around 60%. And we know that typically when Palantir gives a guidance, it tends to overperform that guidance by 3, 5, and sometimes even more. So that's the little hint. I personally think we will see more and more surprise on the margin side, because as we all, I think is useful to remember, this business has insane operating leverage. Means that with the same resources, you can generate more and more revenues. But if you keep the cost fixed, the free cash flow, the profits that you get from those revenues increase much more than the revenue increase. So I believe we will see some good surprise, not only on the revenue side, but more importantly on the bottom line.
What was the question, Amit?
Just reaction if it were down 10% or up 10%. Does it? How do you? How
Okay,
would you
so
think?
let's throw a number. My guess, plus 15.
It feels like 10% for Palantir. That's like, any other day. It doesn't feel. I'm gonna go with 20% up. My expectation.
Plus 25.
Plus 30. I'll bigger goal. No, look, in general, one fun fact for everyone is Palantir is now at the lowest RSI since 2022. There are some technical things that matter, some that don't. People hate RSI. They don't care about RSI. But look, I do think another 10% down after the drop it's already taken from the absolute highs, a bit unwarranted. I feel Robinhood's drop today is unwarranted, but nonetheless, the market is the market. Could I see it going down 10%? Of course, because they took Microsoft down 10%. But if Palantir really puts up the numbers, and all three of us believe they are going to absolutely wipe the floor with these numbers, especially on the margin side, I do think the street should be positive towards that. And so
I think it's like undervalued where it's currently trading, actually. So assuming that the numbers are there, and if it trades down, I might have to consolidate some positions to buy more Palantir, which is, rare to say in this day and age. When you've been in Palantir since the single digits and you're like excited to buy at, where are we? 140, 150, then,
Let's flip it. Let's say it drops like 20%, but the results are actually very strong and aligned. Wouldn't it be a crazy good opportunity?
Yeah,
that's what I'm saying. Yeah.
So I think a lot of institutions would be excited if they get a big drop on some of the best numbers we've seen in software.
So assuming the numbers are actually strong, as I think is reasonable to assume given the strength of the AI wave, the government spending, and so on, even a brutal crash would be not that worrying, in my opinion. Also, considering that the company has 6 billion in cash, I would be happy if the company deploys some cash into buyback.
Which might be closer to 7 billion as we get the earnings as well.
Yeah, true.
Monday, February 2nd, 4 p.m., Palantir Q4 2025 earnings. Thank you, everybody, for being here. The stock market is now closed. And now we wait. And now we wait. We are going to be refreshing our screens, all of us. Usually we get the numbers.
Yeah, I was going to ask, how long do we typically have to wait for these?
I think it's like 2-3 minutes. It's not usually a 4:05. It happens, I think, a bit quicker. So we should be getting it.
Depends on how many people are pressing the web update on the website. The more updates, the more pressure they will have.
That's also true. Also, we'll probably get a letter from Carp. I will read that letter as soon as we get it out loud to everybody. And we'll see what he has to say. You're getting a little bit of a move after hours, about 1% right there. No numbers yet. 149 after hours. Street's expecting 23 cents of EPS and 1.34 billion of revenue. 1.34 billion.
Do you guys think that we cross 1,000 customers? I think so. Typically, Q4 is the strongest, net addition quarter of the whole year. So I'm expecting that to actually cross 1K.
And the last quarter, we were at 911.
911.
Yeah. So, yes, it makes sense. If we in a Q2, we got 80 clients. In Q3, just 60. So pretty good chances. And it would be epic. to cross the 1K customers. Just keep in mind, a company like Snowflake has more than 10,000 customers.
Right.
And Salesforce 200,000. So there's a scale to this
Wow.
thing.
Yeah, I think close to 1,000 customers, close to 7 billion in cash. Adjusted operating margins probably above 50. So now it's just a question of seeing, and then the guidance. If they can guide anywhere from 55 to 60% for next year, that would be a very big deal.
Emir, maybe you mentioned it before about the net dollar retention. We mentioned that is gradually going up, now around 134%, meaning that existing customers are expanding on average 34%. Is there a particular number you are expecting on that side? What's the trend you're seeing?
Yeah, 138. So we always talk about this, and to me, it's the most important number because it shows the scalability of the revenues and that growth is not going to slow down. So I have them doing 138, but to be honest, I've always, under forecasted that number. So I would not be surprised if we see 140. That would be like pop the champagne kind of moment, But yeah, if they can be at 138, that would be, I would be very, very impressed.
By the way, SpaceX has confirmed their merger with XAI.
Wow.
Damn. Are you in a SpaceX, Amit? I know you've been doing some private deals.
I do not have any private exposure to SpaceX, but this is a big deal. I mean, combining these two, and then you get Tesla in there, boom, you've got the Elon Musk Enterprises in one. So company-wide memo, SpaceX says space-based AI is the only way to scale the technology. All right, about a minute and a half left.
Just a gossip. Have you noticed that Databricks hasn't raised equity, but they raised debt, like 2 billion? I personally speculate that they are in the position where they don't need to raise equity because they're free cash flow positive, but they're just waiting Palantir to be crazy expensive to drop the IPO.
It's what we've been saying for like years, right? Like to time the AI top is like when Databricks goes public. We've been saying for a while now.
Yeah, but that's a signal that Palantir is not expensive enough to drop the IPO, which intrinsically could be a good sign for us.
All right, about 20 seconds. And we should have the
I'm dropping pieces here.
Yeah, obviously stock price can be incredibly volatile here, but we're going to try to get the numbers as soon as we can. Oh, we're green. We are green. We are greeny green. Oh boy, 7.5% up. We are a little green. A little bit more. Okay, earnings 25
Look
cents.
at the candle.
25 cents versus 23 cents. That's a beat on EPS. Revenue 1.407 billion versus 1.34 expected. Revenue, folks, we have hit 70% year-over-year growth for Q4.
Wow.
Yeah, that's what I had them at exactly. So that's amazing.
Last quarter was 63%. We hit 74%. Fiscal year revenue, holy guacamole. 7.18 billion they're guiding for next year versus 6.2 expected.
Oh my God.
That's about $1 billion more than expected. Or 900 million more than oh my, that is like,
wait, what? For 2026?
For 2026, they are guiding fiscal year outlook 7.182 to 7.198 versus the analyst estimate of 6.2.
Yeah, I have my model that says that Palantir is undervalued is at 6.3 billion for next year. That's insane.
Dude, that's $1 billion. And they're going to beat those numbers by the end of next year. That's $1 billion beat against the analyst. This company does not stop surprising us. My goodness.
This candle is not strong enough. Like this candle should double. Like what?
Q4 2025 commercial revenue growth of 137% year over year. Total revenue up 70% year over year. Guides fiscal year revenue growth of 61% and commercial revenue growth of 115%.
And
for Palantir.
Consider, guys, that if a company like this puts a guidance out, these numbers are already almost booked.
Yeah,
because
this is realistically their conservative guidance, to be honest.
Dude, their guidance is like 2 million apart. Like, 1.478 billion or 1.47. Like, it's so tight always. So yeah, this is, oh my god, I have to do a lot of revisions after the earnings here.
That's a rule of
crazy.
40 of 130.
Oh my
Guys,
god.
this is unfreaking. But this is like, this is. I think Palantir is in the running for being one of the greatest companies of all time with these numbers. I mean, if they keep scaling this over the next decade, which why would you doubt they have the ability to scale? 8% up on the day, back to 160, baby. Software meltdown is not happening in the world of Palantir. It's just not.
We said it like after Q2, these are the best SaaS earnings. Q3, oh my god, new best SaaS earnings I've ever seen. And then we have this quarter, Q4, potential for the new best SaaS earnings, like 3 quarters in a row.
Rule of 127. Rule of 127. I think last quarter was what, 104? Or no, it was 112, right? So that's beating it by quite a margin. I mean, regardless of what happens to the stock, again, it's up 6%. It could go down, but the level of expansion we are seeing on margins I mean, what software company is guiding 60% revenue growth for next year? And you know they're going to beat that after doing 70% in Q4. This is unheard of. The only other company that's putting up anything close to these numbers is NVIDIA or the memory names. And obviously the memory names have had the super cycle that has happened over the past couple of months. No other software company is putting up these numbers.
Palantir single-handedly saving the SaaS trade.
Just to give you a sense, Palantir was already smashing completely all the other enterprise software. And we know ServiceNow just grew 22%. And all the others are more or less exactly like before. So the delta between what Palantir is doing already on the revenue side is crazy. And then we also have the margins below that are expanding like crazy, while all the others are more or less stuck. And companies like ServiceNow and Snowflake are spending so much in M&A that is delivering nothing.
This is just every quarter we are blown away. This has to be the big. I mean, this is wow, like unfreaking believable execution and growth, and then the numbers to back it up that we are seeing from Palantir.
Cents adjusted. This is on revenue of $1.4 billion, both better than expected. And U.S. revenue is up 93% year on year, topping $1 billion for the first time for a quarter. U.S. commercial revenue up 137%. Both Q1 and full year revenue forecasts blowing past estimates. $7.2 billion is what's expected for 2026. U.S. commercial to grow by at least 115%. CEO Alex Karp telling me, quote, "It's the U.S. and not Canada. Western Europe thinks they're going to magically catch up, but these are escape velocity numbers. The catch-up function that we've been warning people does not exist now. Demand for Palantir products, he says, is, quote, so large that the company is not even engaging with some allied countries on new products now. It's really all about America." On the AI landscape, Karp adding, quote, "We are very focused on Palantir, but what does it mean for other companies when Palantir is forecasting 61% growth off of a massive base with 93% growth in the US and a rule of 127? Guys, rule of 40 score of 127%. You really just don't see that anywhere but Palantir results. We're doing this with a small and declining sales force too, according to Alex Karp. He also had some comments on ICE and some other things for the quarter. Go to cnbc.com for more of that conversation. In the meantime, if you take a look at shares of Palantir, we're up about.
I mean,
55% operating margins. What?
Wait, really?
No,
Adjusted
wait. Oh,
55?
sorry, I read it wrong. I read it cash from operation. Income from operation is 41, so already crossed that 40% threshold. What did I say before? Like I was like, yeah, if they do 38%, I'm happy. They did 41%.
They did 41% adjusted op margins.
No, income from like not adjusted.
Okay, so what's
the operating margin? The adjusted
yes,
EBITDA was 57%.
Oh my.
That
I don't see the adjusted
57%
EBIT.
is the
Yeah,
EBIT,
adjusted EBIT.
EBIT adjusted.
And then the net income margin is 41%, which is, again, 40 cents of every dollar is turning into profit for this company. 7.2 billion in cash. So they crossed 7 billion in cash now. Again, net income of 575 million, record-setting 4.2 billion of total contract value, remaining deal value of 4.34 billion, revenue again 70% year over year, closed at least 180 deals of 1 million, 84 deals of 5 million, 61 deals of at least 10 million. Customer count, do we have that? 34% year over year and 5% quarter over quarter. Okay, so customer count is still below 1,000. If we do the math real quick, their customer count is 957. Which you know, that's not crazy customer count growth, but they're getting a lot more from their customers, and you know, the margins on the business are so good that they're making up for the volume with margins, and so that's what's leading them to get this rule of 40 of 127. And then you had EPS of 25 cents. I mean, this was a big one. Here's what Karp said. Palantir's rule of 40 score is now an incredible 127%. Last quarter, our U.S. revenue grew 93% year over year, and U.S. commercial revenue 137%. We are also announcing 2026 revenue growth of 61% year over year guide. We are an N of 1, and these numbers prove it. Palantir is alone in choosing to exclusively focus on scaling the operational leverage made possible by the rapid advancements of AI models, a trend that we first called commodity cognition well before others started repeating it. By the way, he is absolutely correct about that. Now everyone is realizing that the LLMs are a commodity. Palantir has been saying that for a very long time.
And you know the fun fact that it was a couple of weeks ago that the Databricks CEO went out saying, oh, you know what? LLMs are like a commodity. They're like hydrocarbons. It's like, I've already heard that.
Yeah, I heard that 2 years ago. Who was that? People are coming around to it now.
Dragos, thank you for the gifted 50. Appreciated. Dragos got into this stock at $15 in February of 2024. It has been an incredible journey. So many of you that have been with us for so many years. I just had an entire New York meetup yesterday. The amount of people that said Palantir changed their lives. And, you know, this company has done more for me than I could ever possibly imagine. And, you know, when the company has changed your life, like it has for all three of us, and they're putting up the results to back up the growth, to make you think the story really is just beginning, it is a very, very special time to be covering this company and to be part of this journey. So congrats to everybody. The shareholder letter is out. I'm going to read it, and then we'll get deeper into the numbers. Alex Karp, February 2nd, 2026. We are at the outset, the very beginning of a generational project. Our financial results, those crude and imperfect metrics by which a market filled with both excitement and fear attempts to assess the value of the companies it covets, have again exceeded even our most ambitious expectations. We generated 1.4 billion in revenue in the fourth quarter last year, a new record in our 23-year history, representing a 70% growth rate over the same period the year before. Such a massive acceleration in growth for a company of this scale and size is a remarkable achievement, a cosmic reward of sorts to those who are interested in advancing our admittedly idiosyncratic project and embrace, or at least did not wholly reject, our mode of working. The more familiar path for technology companies has been to seek this affection and capital of the public markets and to monetize at the height of expectation before entering a long, certain contraction into obscurity. We declined to take this approach. Our public offering more than 5 years ago marked the beginning of our ascent, not its peak. And yet, we have achieved this level of growth with significant discipline, which is seemingly scarce in the industry today, generating a new record of $609 million in profit in a single quarter, representing a 28% quarter-over-quarter increase. We still remember and will not soon forget enduring for years polite yet firm questions about the potential profitability and indeed more fundamentally the wisdom of our approach. Other pockets of what some not incorrectly describe as an exuberant market for AI systems may feel pressure to manage their businesses around their financials. Our record profit, however, is pure and uncontrived. And it is perhaps more important, the consequences of a business built around software platforms, not legions of well-credentialed consultants with their presentations and wise counsel. Our business in the United States sits at the core of this company. We generated 1.1 billion in revenue in the US market alone last year, representing a 93% growth rate over the same period the year before. Our rise has been, and we believe will continue to be, driven by an increasingly discerning set of companies and institutions in the United States that understand the value of AI, but are now declining to pay for science projects. A gulf is emerging between those who perceive the preconditions for harnessing the power of AI and for those who are far more vulnerable and adrift. Indeed, the world of AI... Next time, I need to tell my sister not to call me when I'm reading Karp's letter. A gulf is emerging those who perceive the she has a lot of Palantir and she has no idea that we have earnings today. Indeed, the world of AI adoption is increasingly divided between haves and have-nots. Some institutions as well as nations are thriving. Others have been left naked on the beach. The large language models alone will not lead us to salvation. They require a means of reliably and efficiently interacting with the Byzantine complexity of the modern enterprise, its tangle of data sets and operations and personnel. The strings of text produced by the language models are literal without software architecture that can lend a grammar and structure to the output of these probabilistic prediction engines. The models must be tethered to objects in the real world, and it is that tether that means the grounding and orientation that we have built, aka the ontology. As a result, our U.S. commercial business, once a promising yet mostly theoretical backwater of our company, is now growing at an astonishing rate, generating $507 million last quarter, a 137% increase over the same period a year ago. To be clear, our U.S. commercial business has more than doubled in the space of 12 months. Such a brisk rate of expansion, all while maintaining record levels of profitability, would be remarkable for a newly hatched startup. It is essentially unprecedented, we believe, for a company entering in its third decade of operations. We have arrived at this moment as a result of fierce pragmatism, a nearly ruthless focus on results and outcomes at the expense of performative and the theatrical. In 1962, Deng Xiaoping, who would architect and oversee the remarkable and sweeping opening of China's economy to the outside world, famously reminded his country that it doesn't matter if a cat is black or white as long as it catches mice. He would eventually be purged from the Communist Party for his reformist instincts and sent to work in a tractor factory in Jing province. The jargon and posturing in this technology industry, the breathless anticipation of the arrival of AI or artificial general intelligence, has today reached new heights. Anything lacking a zealous focus on the value being created by these technical systems, the mice that the cat actually catches, will ultimately fade to the gray and be forgotten. It is confounding to many that the same software systems that is capable of preventing a terror attack may be equally capable of preventing an unconstitutional intrusion into the private lives of citizens by the state. But that is the software system that we have quite intentionally built. And such software, alongside the large language models that have remade the world, is set not only to further reshape U.S. national security, but also to transform our collective ability to guard against government overreach. It is the uninvited ear of the state with which the Fourth Amendment is concerned. And as Justice Stewart reminded us in that eclectic and landmark case of 1967, which reimagined what constitutes an unlawful breach into our most private spaces, quote, wherever a man may be, he is entitled to know that he will remain free from unreasonable searches and seizures. Such freedom from unwarranted government surveillance, however, whether it be an intruding eye of the state or its uninvited ear, requires the construction of a technical system that is built to make possible oversight of its own use and limit, not expand the material and information subject to access. It should indeed be uncontroversial that the single most effective means of guarding against incursions into our private lives is to invest in the development of a technical platform that makes possible constraints on government action and investigation through granular permissioning capabilities, to ensure that the state and its agents can see only what ought to be seen in functional audit logs to ensure both external and internal threats. And that is the system, singular and without peer, we believe we have built. The construction of such a platform, one that reflects our ethical commitment, should of course be a rallying cry for progressives and critical thinkers across the political spectrum who profess to be interested in advancing the values of the Fourth Amendment. And yet many take the easier path, blithely dismissing technology as the enemy and as a result depriving themselves of any role in crafting our most capable shield against the very government that we serve. We have as a country, and perhaps as well as a civilization, grown uncertain of what we believe and far too fearful of embracing any degree of cultural specificity in our communal lives, banishing sentiment and belief from the public and corporate spheres under an often hollow banner of inclusion. But inclusion into what? What is the common set of values and sentiments, that messy yet fertile amalgamation of interest, predecalations, and commitments that constitutes an authentic community into what we aspire to include anyone? Is this nation nothing more than an economic zone, an empty administrative vessel through which a new globalized elite can travel and enrich itself? It seems at times we have abandoned any hope of patrolling the boundaries of our community, of resisting the superficial appeal of a hollow pluralism in which all cultures and cultural values are declared by fiat and without reflection of equal. We are in retreat, so fearful of common endeavor and identity that it all remains in the self. In The Culture of Narcissism, published in 1979, Christopher Lasch correctly observed that the psychological man of the 20th century seeks neither individual self-aggrandizement nor spiritual transcendence, but peace of mind. And yet such peace is often shallow and unsatisfying. It is that instinct within us to prize the management of our own psychology above all else that makes possible fabricated grievances and imaginized slights. I fear that a divide is emerging in the world. It is a divide and now perhaps more of a gulf between those who have the temerity to build, to expose themselves to other, to risk failure and defeat, and for those whose sense of self is propped up by a purely oppositional identity, a loose constellation of beliefs that one is superior, moral, and constitutionally better to others. The public understands the results are what matters, not the perception of results or the appearance of forward progress and movement, but actual results and movement. The discussion seminar, Modern Politics, has been exposed as such to many, and the public has grown quite disinterested in the theatricality of the contemporary political stage. We note that it is a mistake to think the act of creation, of construction, of building something from nothing as being confined to the technology of commercial sectors. Far from it. There are dancers and poets and painters and writers and teachers and revolutionaries and radicals, all of whom are creators in the thickest sense of the word. We must celebrate the risks they take, the beliefs they wield, and the empires they are building. Yet the chattering class and merely critical have lulled us into a kind of sleep, into thinking the commentary and rhetoric alone, without any correlate or yardstick in the physical world, is sufficient. We should and indeed must revolt. An uncomfortable fact is that those who are the most bearish on their own abilities often turn to organizing politically. At Palantir, we have made the vital decision to decline our bend of way of working to a world in which success is whatever passes for success, as the moral philosopher Alasdair MacIntyre, a towering figure, wrote in After Virtue in 1981. And it would be prudent at this juncture to prepare for a world in which the critical class finds itself increasingly marginalized, its power over the culture diminished in insignificant retreat. It would be utterly striking to some on the outside how we run this raucous artist colony of a company, more akin to an engineering commune than a corporation. A remarkable amount of internal disagreement and conflict is permitted, even encouraged. The raw power of authority, the threat of coercion, is wielded sparingly and hopefully with true restraint. Such tolerance for dissent and ambition and rogue actors and radical ideas have cultivated in us something approaching magnanimity towards our adversaries and even our enemies. A degree of grace in business and indeed life, those who have wronged us, even those who pray for our demise, is vital. Our collective temptation to cast our antagonists, geopolitical and otherwise, as narrow caricatures, refusing to acknowledge their strengths and advantages, will only diminish our ability to prevail over them in the long term. A maniacal obsession with one's own virtuousness and the insidiousness of one's enemies can indeed be blinding. In an interview last year, the dean of post-war comedy, Lorne Michaels, suggested to Maureen Dowd that the most effective and withering caricatures of seemingly distasteful personalities are the ones that find a drop of humanity in them. The same could be said of skirmishes and antagonisms in business and indeed on the world stage. A degree of humility and finding that drop of humanity in one's opponent can be a lethal advantage. Sincerely, Alex Karp, co-founder and chief executive officer of Palantir.
Karp chose violence.
Well, Karp chose violence. I think my quick summary of that is, I think it's quite obvious, but there has been a lot of controversial dialogue about the work Palantir does to protect the West. And Karp is giving a bit middle finger to the people that only know how to protest, only know how to critically think from ivory towers, and don't actually live in the real world where you actually have to build systems to protect democracy. That's my interpretation. Obviously, people can disagree with this interpretation, but at its core, he's connecting that philosophical advantage that has been ingrained in Palantir from the very beginning for their business success, the reason companies want to work with them, the reason they're succeeding in the US, the reason that their growth is actually reflecting operating margins because they don't have to hire 10,000 people to sell the software because the software can sell itself, which is why they have the numbers that they have. You put all that together, and that's why you get the quarter that you got from Palantir.
It's quite a flame to all the naysayers, starting from the other software companies that are now building AI, but at the end of the day, they're all converging to the same stuff Palantir has been saying for years. There was a flame towards companies that need financial engineering to make up stuff. So yes, I'm financing this capex, but you give me the revenues, so we are all together happy. Palantir doesn't need to do that stuff. We grew organically with the strength of our product. And I personally liked, but I need to read it again, probably 2 times to really grasp the flavors, the nuances of the controversies on ICE. There was a sentence I liked on, people so bearish on their own ability that they end up gathering politically.
Yeah, I would agree. Amir, any quick thoughts on that letter? And then we'll get into the numbers.
No, I wasn't really. I need to, as Arnie mentioned, I need to read those, on my own spare time slowly to grasp them. Really, they are works of art. But one number here caught my number, which will surprise a lot of people. Outstanding shares only grew 1.8% year over year.
Wow.
1.8%. And people always say, oh, they're diluting us to oblivion. Like, no, SPC is coming down. Like SPC for 2025 is less than 2024. And outstanding shares increased by 1.8%. So there you go, like haters being destroyed every which way. Oh, the slides are out. Oh my God.
Yeah, the slides are out. You can pull it up. Again, we'll go through the numbers real quick. We have some headlines as well after hours. Let me just get through these. OpenAI has determined it needs alternatives to NVIDIA's latest AI chips in some cases, has sought alternatives since last year. That's probably why NVIDIA took a dump right at the close. OpenAI unsatisfied with speed at which NVIDIA's hardware can spit out answers to ChatGPT users for complex problems. NVIDIA stock after hours, 184. This thing was 190 in the morning. Jensen definitely talked about OpenAI over the weekend. He was a bit annoyed at the questions he was getting around if he's going to invest with OpenAI. So that was definitely a big headline over the weekend. Also, Trump, he's creating a mineral reserve for American industry. Trump is creating a mineral reserve for U.S. industry with $10 billion from a bank and $2 billion from the private sector to fund this. This should be important for the rare earth stocks. They're not really moving after hours, CRML, MP, etc. But, well, no, they are. CRML is up 5%. It was down 5% in the morning. And then MP is up 2% after hours as well. Real quick, before we get into numbers, this was the video by Jensen over the weekend that was really important. Obviously, this OpenAI headline is starting to affect a lot of different companies that are out there.
Quickly about OpenAI again.
Sure.
So yesterday you said that the NVIDIA is not going to invest as much as $100 billion in OpenAI.
No,
for the current run.
We never said we were going to invest $100 billion in one round. That never was said.
But how about the overall commitment? Because last September you and OpenAI
there was never a commitment. It was if they invited us to. So let's start over again. They invited us to invest up to $100 billion, and of course we were very happy and honored that they invited us. But we will invest one step at a time.
All right, but is that overall commitment still stands, or it's not a commitment?
I told you just now. Okay. Yeah, you keep putting words in my mouth. Okay. It's not.
Sorry about
that. Yeah. I know that. Yeah. They invited us to invest up to $100 billion, and we are honored that they invited us. We will consider each round one at a time. Yeah.
Now, look, Jensen understandably annoyed right there, but in defense of the reporter, when NVIDIA and OpenAI announced the $100 billion potential investment back in September, this was not the type of vocabulary, terminology, or even mood that Jensen had when asked about OpenAI. It was quite different for those that remember that announcement back in September. Things have obviously changed. There are many reports that Jensen has not been happy with some of NVIDIA's decisions, the way they've been deploying capital, et cetera, et cetera. AMD's up after hours because maybe OpenAI is going to buy more AMD chips. By the way, they have a chance to own 10% of AMD one day, so it makes sense they would want to buy AMD chips. I don't think Jensen really liked that they made that deal after they made the NVIDIA deal. So there's a lot of conflicting things going on around this NVIDIA OpenAI partnership, and I'm sure we'll have a lot more to talk about. AMD right there, up 2.5% after hours. Palantir still holding a decent chunk of those gains, folks. 7%, 158. Up after hours. In a world of SaaS carnage, Palantir needed to deliver, and boy, did they deliver. You're seeing that stock hold 7% after hours.
Sorry.
Yeah.
139 net dollar retention, but there's an even crazier number. So, of course, that net dollar retention, insane. But the craziest number here is that, well, yeah, scroll up slightly. The total RPO. Look at Q4. What the heck? That grew 143% remaining performance obligations.
Wow.
143%. What?
You're looking
And
at
that
the
is commercial.
you're looking at
that's
the
basically
900 million to 2.59 billion, right?
no, that's long term. Look at the total.
Oh, I see.
So-
173 to 421. Okay, gotcha.
That is
So the short-term RPO are essentially the revenues that will be recorded in 1 year from the commercial side. But then there is the long-term RPO, which are revenues that are contractually needed to be recorded over time, but over more than 1 year.
so this is basically guaranteed revenue, but it is a proxy for commercial, because a lot of the government contracts, due to optionality in them, and there's no like strict time limits on them and so forth. So this is basically all commercial and guaranteed revenue that will be recognized, like already recorded. Like, yeah, we're going to have 4.21 billion from commercial. Like that's already like done. Like they're just waiting to collect it. So that is
Wait, so
insane.
hold on. You're telling me they grew remaining performance obligations by 243%, and absolutely $0 of that RPO is connected or coming from OpenAI. Is that what you're telling me? Because
I would say
that sounds like a pretty good RPO to me, when absolutely none of it is coming from the company that keeps saying they're going to pay Microsoft and Oracle and hasn't given a dime to them in these RPOs.
Well,
So-
it's the
so-
opposite of Microsoft, because Microsoft, we're receiving money from OpenAI, but Palantir pays OpenAI.
Yeah, you mean
So-
Microsoft pays OpenAI? So yeah, what did Microsoft say? Like 40% of their RPO is like commitments from OpenAI, and who knows if they'll be able to pay? Well, they're paying themselves essentially. But this, yeah, I mean, I don't know if it's 100% non-government, but a majority of the government contract types, they don't fit in here, and it's also in the 10K. They say that our RPO basically excludes most of government revenue. So yeah, that grew 143%. That is an insane number.
And again,
also,
one of the reasons Microsoft got hit, at least this is one of the widely reported reasons, is because the street doesn't believe that number. Microsoft said, hey, we have 625 billion of RPO. Basically 50% of it is OpenAI, 300 billion. The street's like, no, we don't believe that, because Oracle said they had 350 billion of RPO, and basically 85% of it is that of OpenAI, and the street doesn't believe it. And as a result, you've seen Oracle's stock price go down. In fact, Oracle had to literally tweet today. I mean, I've never seen a company put out a tweet like this. They had to tweet today, the NVIDIA OpenAI deal has zero impact on our ability to get OpenAI to pay us. We remain highly confident in OpenAI's ability to raise funds and meet its commitments. So it's really nice to see a software company that's guiding for 243% RPO growth and have none of that associated with a company that the street simply doesn't think is going to be good on their financial conditions. That also probably will add a premium to healthy RPO over RPO that ultimately is seen as not actually real in the first place.
let me see customers.
Palantir at
saw-
7.2% after hours.
I saw an insane number here. Do you know what they're guiding for growth for next quarter?
No, what's next quarter?
Oh, we didn't even see that number. Yeah.
They're guiding for 74%
Holy crap.
year on year for the quarter at 57% margin. And as we mentioned, when Palantir guides a number, they already know with relatively good certainty that number is going to be booked due to the remaining performance obligation. So the big margin of variety comes from the government side.
Dude,
So-
I mean, so they're guiding for 61% fiscal year growth. They're guiding for 74, Arnie, you're saying, for Q1. They're probably going to come in closer to, I mean, realistically, 77, 78, maybe 80. But that means that 61% year over year is probably going to get up to 70 by the end of the year. I mean, it's not crazy to imagine that, especially if the margins continue to scale the way it's scaling. I mean, this is unprecedented growth. Now, people will come back and say, all right, a lot of it's priced in. And I don't know if that's true. I mean, yes, it trades at a premium, but if they compound like this for the next 5 years, now it's unheard of to grow 70% for 5 years. Like, it's not easy to keep up these numbers, but if they're even close to that, 50%, not 70%, which is a meaningful decline, 70 to 50, I don't know if that's exactly priced in when you go out to 2030.
I can tell you it is not priced in due to what analysts are incorporating. I wrote the post today mentioning that analysts are not estimating correctly both the revenue side, because they were already seeing the revenue to slow down after 2026. Do you see my screen or not yet?
Let me share it. Yeah,
Okay.
got it.
So this is what the analysts currently estimate for the revenue. For 2026, 42%, and for 2027, 38%. And we just said that the company is projecting for the next year 57% of the revenue. So we're talking about 15% more on the revenue side, which is already crazy, which already forces analysts to adjust completely their own estimates. And then on the margin side, they were expecting essentially the margins to be flat. Now we don't see it here, but essentially the margins that analysts were expecting were like 50%, 50%, while the company is already saying us, look, we believe our operating margin adjusted, so the free cash flow, will be 57%. While the analysts expect some 50% to be stable for 2026 and 2027, which intrinsically means that the actual free cash flow that Palantir itself sees to get will be massively more positive. So there is already a 15% gap from the revenue, which means 15% more free cash flow. But then you have also margin expansion of 7 points, which means the actual free cash flow to be much more than like 20, 25% compared with what analysts estimate. So
and the reason this divergence is so important is because the numbers that Arnie are talking about are just crazy. And Palantir is guiding for that. But the analysts still don't believe that. And I think one of the reasons the stock is, Wall Street is so much more about perception than reality so much of the time. And I think those that have been on the journey over the past 2 years, one of the crucial elements why this stock has gone up is because almost consensus analysts, even the most bullish ones, could not believe they could reaccelerate to these levels. And they did. And now they're going even above these levels, and they're probably sandbagging to go even above those levels. Wall Street still doesn't believe it, which is where you can get that multiple expansion and eventual re-rating, because people just say, all right, I give up. They were right.
So we lost 3 customers internationally. I'm curious about that. And if they'll be back or not, as we have seen historically, companies like Coca-Cola leaving Palantir, like, oh my God, no, we need Palantir. So I'm always surprised when we have, a outflow of customers, because you've actually seen what Palantir can do, what the kind of value that Palantir can build for you. So that one was a bit surprising when you calculate it. But another really crazy one is that we crossed over, TCV of 10.8 billion, which is also crazy.
Yeah, I mean, these numbers just, I mean, that is the first little nitpicky red flag I've seen, that we lost a couple of international customers. And I think Karp already kind of addressed that in his letter by saying, we're focusing on the US. He'll probably say that on the call. The call, by the way, starts in 20 minutes, so the call is not live yet. But I mean, it's really hard to find things that are bad in this quarter.
Yeah, that's 128% increase in how many contracts that they, and more importantly, they recorded less deals this quarter than the quarter prior, but the deals have been so massive that they still grew, the total contract value recorded for the quarter by 133% for the quarter at 4.2 billion. That is insanity. Like like I understand that they are like focusing on less but way larger contracts now, because they don't have a sales force. I mean, we've been talking about that for a long time. So just finding these massive contracts is really impressive. It's a lot easier to scale the smaller ones, and have them adopt your products, but finding these massive outsized deals really shows strength, and that like these actual institutions and companies that matter, they are choosing Palantir over everyone else. And then all the adjacent companies, all the smaller companies within the same industry, they're like, well, what are the big dogs using? Oh, they're using Palantir, we should probably also be using Palantir. So it like trickles down from the top. So as long as they keep securing these massive large contracts, it's going to trickle down within the same industry.
I think one thing that's also important, you talked about losing 3 of the international customers. There is a world based on Karp's letter where Palantir themselves are not taking on those new contracts or taking on those customers, right? Because the opportunity cost of working with a customer that's really not doing anything for their top line growth in international government business where the margins aren't as good as US. I mean, that could be them making, that could be a strategic thing versus a red flag per se. It might be actually a green flag.
Yeah, we already know. I think it's been about a year and a half or 2 years now where Karp actively said in an interview that they are closing down like their European offices. He's like, no, there's like no point to be here because Europe doesn't want to be a part of this. So why should we invest resources in Europe when they don't want to play ball at all? So likely, as he does every earnings call, he's likely going to comment on Europe and Europe stagnating. So looking forward to that.
Let me do a couple of these super chats real quick. Zach, thank you for the gift of 20 memberships. Really do appreciate it. Thank you for giving those memberships and spreading the love around the chat. Claudio, thank you for becoming a member. Amir, you got a super chat on your channel. Love your deep analysis, Amir. So
wow, thank you. I didn't even see that. Oh my God. Thank you so much, man.
Fets, I know you've been on this story with us for a long time. Thank you for the super chat. Congrats, earnings. Fellas, PTFB, thank you, Fets, for being here. Blurb, thank you for the super chat for $5. Pronunciation on point when it matters. I'm sure I definitely messed up a few words in that letter, but I appreciate you being here. And then Bike Pimp, thank you for the 50 as well. This is just for reading that letter. Honestly, we've been doing these earnings calls for 3.5 years now. And that letter is my favorite part of the call. I'm a real big philosophy guy. Anyone who knows me, who's kept up with the channel, I really do love philosophy. It's something that I've studied for a long time. It's studied when I'm bored. I'll watch philosophy videos, read about philosophical texts. Karp is just one of those CEOs where not many can philosophically write a letter and connect it to the business and take a stance, have a backbone to believe in something. So just even having the honor and privilege of being able to disseminate that letter to the people that are watching and getting to read it, it really does mean a lot to me. And I look forward to reading it every quarter. So happy we got to read it here. One of the analysts who didn't like Palantir for a long time, he's live. Let's see what he has to say. Here's Louis De Palma.
Ooh. Some highlights. U.S. revenue up 93% year over year, topping $1 billion for the first time ever. U.S. commercial revenue, that was a key line item that analysts were watching for, up 137%. And the company also blew past estimates for the first quarter and full year revenue estimates. Our next guest upgraded the stock to outperform this morning. Let's bring in William Blair analyst Louis De Palma. Louis, great to have you with us. Are you breathing a sigh of relief? It takes a lot to go out on a limb, upgrading a stock the day before, the morning it reports.
Yeah, we do that fairly often. I wouldn't necessarily say it's a sigh of relief. We have general 12-month focus on where the stock should end up. And Palantir shares, they've been very volatile over the past several months. So
well, I was going to ask you about that, because even if you believe it's a great business, even if you believe that it is worth the forward PE that it's trading at, which is some, I don't know, in the upper echelons of where companies are valued, maybe it's number 2 or number 3 at this point, it's still in the software sector, and that sector is really facing a valuation compression at this point, and it's indiscriminate. So how do you reconcile the two?
Yes, it's interesting how you categorize it in the software sector, because I'm an aerospace and defense analyst. I come from examining Palantir with a unique angle, with a focus on Department of War contracts. And what's interesting is, while there's been, major valuation compression for software stocks, drone stocks and missile stocks have gone through the roof in terms of their valuations. So Palantir is a key supplier to many of the weapon systems. In our note, we highlighted how they forged a major contract with General Dynamics Electric Boat to help accelerate production of Columbia-class nuclear-powered submarines. And Palantir is a beneficiary of a potential $1.5 trillion defense budget for 2027. There's different dynamics taking place with Palantir and the other software stocks.
Louis, I guess there's, could be any number of explanations for why the stock has come in as hard as it has. Obviously, the sector has been weak, but also there's a perception out there that, under a different party's administration, Palantir may not be in favor with the defense budget and things like that. So is that in the stock at this point, or how do you tell investors to think about that?
Well, Palantir still did very well during the Biden administration. They grew at a mid 20% type growth rate. They won the prototype contract for Maven Smart System. They won the prototype contract for the Titan battlefield system. So Palantir will still do, very well under a Democratic regime. But Palantir will do better under a Republican regime. So I think, there's a balance, and that is, generally priced in, but, investors, will cross that bridge, when they get there. Right now, Palantir is thriving, and, they will continue to thrive over the long term, regardless of the administration. It's just a matter of degrees here.
All right. So the stock is holding most of those gains, up almost 8%, back to levels from last week or so. Louis, good to talk to you. Thank you.
Yes, thanks for having me on.
All right.
All right. I have some Palantir OGs with me who have been in it for a minute. You guys know Davis, Michelle, Ray. Some of you guys might not have seen them before on the channel, but they've been a big part of the channel for a long time. Davis, you want to give your raw thoughts?
I think the only thing I love more than Amit is Palantir. How can I not?
He said that in a brotherly love type of way,
Platonically.
Right? Platonic. That's But no, but seriously, how the quarter was. I mean,
the raise in revenue, almost a bill raise. What was it? 900 mil?
Yeah,
I think?
a billion.
And then 70% growth. What Street was expecting 50.
Yes, Street was expecting 63 or something.
Okay, 60. I was thinking 65, 60 to 65, 70. I was just watching the chart go crazy, watching the chat go crazy. I'm speechless.
But the last quarter we were speechless.
Yeah.
And the one before that we were this company
leaves me speechless. You don't.
Anyway, this company has just changed our lives in so many ways, and it's pretty cool to see it. Ray, you also were pretty early. You want to say any thoughts on the quarter?
We'll go to the moon.
Okay, that's good enough. That's good enough. Yeah, dude. For the OGs who have been here for a long time, I mean, this is, again, we were covering this company when it was growing 12% year over year, and that was depressing. The 12% is not enough for a high growth stock, and they've just changed the entire playing field. By the way, Arnie Davis has wanted to say hi to you, so go ahead.
My favorite Palantir OG right here, Arnie.
Yeah.
He loves you, Arnie.
Yep.
Like he really he was so happy to hear you were on the call today.
We all love each other here. I'm waiting for a new song now.
No, the Palantir rap's done. Ask Amit. I recorded it. I just got to put it together now.
No way.
Yep, it happened.
Something hot coming.
Yes.
We have recorded he has recorded a Palantir rap. How long have you been making this rap?
Probably 2 years. I said I'd do it at 100. Stock hit 200. I was like, damn, I actually have to make this now. I was a little nervous in the rap, so it's not as clean as the shanty, but you'll see it.
Could you give us a little preview?
No, you don't want him to give you this.
You'll see it.
I've heard it enough times this weekend. But yeah, it'll probably be posted. Now you can post it because it's a good quarter, so you can post it now. So there you go. All right, guys.
All right.
Well, thank you.
Bye.
Yeah.
I love you all.
Bye.
I'll see y'all next time.
Peace.
Thank you. Bye.
All right. So Louis De Palma going pretty bullish there. Arnie, any thoughts on him kind of completely changing his mind on Palantir at these levels now?
Personally, I've never seen a pivot like that just before the numbers.
Yeah.
So it's like he must have talked to someone in the industry that is very well a very big client of Palantir or something like that to be that confident into saying, oh shit, like I've been wrong. And he says something that maybe we were not we have never really touched, but essentially De Palma is focused on defense, aerospace, and so on. And he mentioned that so many drone companies, these new emerging military tech, they are all clients of Palantir. So which proves the angle that started last year when Palantir went with a Fed start, with trying to make the environment for the emerging defense companies to work with the government easier. And this is I think the first third-party proof that this stuff is actually happening. And I personally liked the sentence where he said, look, Palantir will do well also in a democratic environment, but when there is a Republic party at command, it will just do better.
Yeah, I agree. I mean, and the fact that the analysts are realizing that in any macro environment, this company is going to win and this company is going to succeed. That is the beauty of the past 5 years and being able to identify Palantir, because there's just not that many companies like that. So again, for the people that scream overvaluation, it's like, yes, we've always acknowledged the company's expensive, but there's not many companies that can win in any macro dynamic that are still at the very beginning of an S curve. And I think that's what we're seeing with Palantir. Vince, thank you for the $10 super chat. Really appreciate that. Doug, thank you for the super chat. Had such a great time over the weekend. I really wish I could have been there to celebrate this earnings with y'all. Congrats to the people who are holding and the people who believe in the mission of the company. Doug was here for the New York meetup. It was awesome to spend time with Doug. He is also a Palantir OG who has been there for a long time. And one of the things that Doug has talked about that even I've learned a lot from his analysis on Palantir is the TAM. And I know people say, oh, when you compare the price to TAM, it's like a useless metric. But it's like, realistically, what is the market opportunity that this company has in front of them? And I think back in 2021, 2022, it maybe was a couple $100 billion. Now, realistically, we're talking about at least a couple trillion if AGI becomes what it becomes, and the orchestration of that technology, that artificial general intelligence inside of an enterprise and a government becomes the most important element of actually harnessing the power of that. I would say it's many tens of trillions. I mean, we don't know how big this market becomes. Not saying Palantir is going to get all of that TAM, but if that TAM is out there, that means the growth rates are possible to achieve over a compounding amount of time, which is where the valuation can expand. And that's where more owners of the company that have equity in the company can see their equity increase. And I think that's what we are hoping to happen over the coming years for Palantir. Stock is holding 7% after hours, and we have the call in 5 minutes.
I mean, just to give you a sense of how big the opportunities for Palantir is, just to have a little sense of how small Palantir is compared with the big giants in the industry. The Palantir is this light blue company. I don't know if you see it identified. These tiny little boxes, blue. And then there is a ServiceNow that is already way bigger at around 3 billion per quarter, and Palantir is less than half. And then you have this big guy, Salesforce. Now, what I find very interesting is Salesforce is essentially a stupid company, but it is very big. So if Salesforce can have 12 billion revenue per quarter and is very focused into CRM, all the other ventures like the data analytics, Slack, yes, very nice, but the big chunk of Salesforce actually comes from CRM. This tells you how big the opportunity is for Palantir. Then there is SAP, similar size. These are dinosaurs that can be disrupted. Essentially in the same way, Unreal can take not only a very big chunk of their revenue, but also become way, way bigger. So that's why inside the company, I saw before the post from Eliano saying, look, we're literally at the beginning. This is a little sense because what Palantir does cannot only be scaled to potentially all the companies, like all the companies have a CRM. Palantir tackles decision-making. And decision-making is literally on every effing company. And it can grow to the very big companies, but over time, it will be used also by smaller companies. The idea that Palantir has, and also that the Palantir partner Northrop, which is a consultancy on Palantir, mentioned, was the next Palantir will be built on Palantir. And we haven't seen that really done yet because it's everything just too early. But imagine that point when Palantir will be scaled, be famous as Salesforce, as SAP, but at the same time having the depth to cover potentially all the use cases in the enterprise context, very niche to each specific industry. This is something that only Palantir is trying to do to that scale.
Yeah, I agree. And I think, a lot of the identification a couple years ago was, would they have this ability to essentially, we've used this term many times. If you've been part of Palantir, you've heard it, but operating system. Can they become an operating system for multiple industries? And it seems like based on this growth, they are not only getting ingrained in certain industries. We just saw that Ship OS deal with the Navy, which was a massive, you talk about an operating system for the Navy becoming entrenched in that. Like, that is a big deal. And $448 million might not seem like a big deal in the short term, but that $448 million, if they do a good job on that, which based on their execution, you can imagine they will, that's going to be $4.8 billion one day. Not overnight, but just knowing that revenue is there in the future, it's going to be theirs. And then they're going to probably capture 50 cents on every dollar of their revenue, bring it to the bottom line. That is why the stock continues to be priced the way it is.
And imagine that stuff, ShipOS, Salesforce can't do that. ServiceNow can't do that. Microsoft, where is Microsoft? It's huge, but it's not tackling the issues. And we're talking about a contract that is supposed to be like a couple $100 million. And this is just one vertical. Imagine this scaled to literally all manufacturing verticals. How big it could become.
Yeah, and it's interesting about Microsoft. They can't even integrate the Copilot properly, and people are talking about running these large scalings. But about Ship OS, let's say that you become the operating system of something like the Navy. That also means that over time, all the allies will be running Ship OS. Everything will be integrated, and there's really no ceiling there.
We have the call starting now.
Oh, shit, let's go.
All right, Palantir, Q4 2025 earnings.
We will make statements regarding our business that may be considered
Do you think we'll have more analysts?
Including statements regarding our first quarter and fiscal 2026 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Sham Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our fourth quarter results are nothing short of historic, capping off a monumental year for our business. In Q4, overall revenue surged 70% year over year, our highest growth rate as a public company, propelled by the relentless momentum of our U.S. business, which now commands 77% of our total revenue, up 93% year over year and 22% sequentially. Our Rule of 40 score reached new heights at 127, up 46 points year over year and 13 points quarter over quarter, proving that hypergrowth and exceptional profitability aren't mutually exclusive, but rather the inevitable outcome of Palantir delivering transformational impact at scale. We closed our highest TCV quarter ever at $4.3 billion, and fourth quarter trailing 12-month revenue from our top 20 customers increased 45% year over year to $94 million per customer, a testament to our customers' conviction. Our customers aren't tentatively trying AI, they're committing to it at scale with Palantir as the driving force. The rapid advancement of AI models is continuing to drive the commoditization of cognition. The next step is for the market to differentiate between those who are supplying the commoditization of cognition and those who are scaling the leverage made possible by it. We are the only enterprise software company that made a conscious choice to focus exclusively on the latter, delivering real-world value for our customers by maximally leveraging these models in production. Palantir is an N of 1. This is what makes a Rule of 127 possible. This is why customers who've crossed the chasm with Palantir, the AI haves, are defining the future of their industries, while those still on the other side, the AI have-nots, are fighting for survival in the present. As Johnson Controls noted about our work together, quote, "It is really incredible to see that you can transform a 140-year-old company with the power of AI." I'm seeing this play out across our customer base. We are moving customers from AI adopters to AI native enterprises, transforming execution into exponential advantage. This is summed up best by an executive at Thomas Cavanaugh Construction who noted, quote, "We've gone all in so much so that every other software must justify its existence. And so far, they haven't been able to. 97% of our employees use Foundry every day. Foundry is our operating system." And he continued, quote, "The ontology is the secret weapon. Nothing else comes close. And not only are we getting rid of third-party software, we've replaced their functionality and then beaten them to new features all within the year because of the ontology." Our U.S. commercial business grew 137% year over year and 28% sequentially, building on the blistering pace of 121% year over year in Q3 and 93% year over year growth in Q2, defying conventional enterprise software dynamics. This isn't just growth, it's compounding acceleration. AIP continues to fundamentally transform how quickly our customers realize value, collapsing the time from initial engagement to transformational impact. Lear noted at our recent DevCon conference their experience starting with 100 users and 4 use cases and growing to 16,000 users and 280 use cases. We're seeing the effects across our entire customer base. Existing customers are expanding faster and larger. For example, a utility company expanded from $7 million ACV in Q1 2025 to $31 million ACV by year-end, while an energy company expanded from $4 million ACV in Q1 2025 to over $20 million ACV by year-end, driven by value generated from new use cases. In addition, new customers are starting with substantial initial deals. A healthcare company completed 2 boot camps with us last summer and signed a $96 million deal with us before the end of the year. An engineering services company saw a series of demos in the fall, then signed an $80 million deal before year-end. Speed to production and transformational scale is no longer optional, it's existential. Palantir remains the only platform delivering that speed at enterprise scale. This revolution isn't limited to just companies. It extends to countries, with the US leading the way. Our U.S. government business grew 66% year over year and 17% sequentially, driven by our mission impact across the Department of Defense, as well as accelerating momentum in civil agencies. The U.S. Navy awarded Palantir a contract worth up to $448 million to modernize the shipbuilding supply chain and accelerate delivery of naval vessels. This engagement exemplifies how Palantir's supply chain expertise, honed across commercial and defense customers, is now being deployed to solve some of the most strategically important challenges facing our nation, including rebuilding its maritime industrial base. The strength of our U.S. government results reflects a fundamental reality. In an era of intensifying global threats and budgetary pressure, the government is turning to software that actually works as speed, precision, and decision advantage are paramount. We're entering 2026 with extremely strong footing. Everything we've built over 2 decades is converging into this moment, and we're charging into the year with unmatched conviction as the defining enterprise software company of this generation. I'll now turn it over to Sham.
Thanks, Ryan. Our focus with AIP continues to be enterprise autonomy, our normative view of the value of AI in the enterprise. HiveMind now lets the AI develop novel solutions to emergent challenges and to identify hidden opportunities. And the rest of AIP enables you to turn those ideas into an implemented reality. Closed-loop evolution of the business with AI, possible because of AIP and ontology. The HiveMind framework is being applied to broader problem sets. We used HiveMind to generate a bespoke AIP demo for a specific customer based only on their website and other public information. The company CTO was blown away by how good the demo fit their internal challenges, even though it was only based on information in the public domain. HiveMind is just that good. We're going to continue to invest in closing the loop between HiveMind's output and the autonomous execution of these ideas at our customers. AIFD continues to delight. AIFD is now capable of powering complex SAP ERP migrations from ECC to S4. Years of work now done in as little as 2 weeks. And we are generalizing AIFD's capabilities to do this for a broader and broader set of problems at our customers. AIFD and OSDK has unleashed pro-code builders in our platforms. We serve over 1 billion API gateway requests a week from applications built by our customers on top of AIP with OSDK. Maven usage is at all-time highs, supporting simultaneous real-world events across combatant commands in the Joint Force. Maven will continue to be rolled out to all combatant commands and many more networks over the rest of this government fiscal year. But Maven is also pushing to the edge. We completed a live fire exercise with Maven coordinating with UAV assets through our new Maven Edge agent called Mage, enabling the declarative statement of mission intent and fully onboard planning, reaction to emergent battlefield realities, and execution. AIP is becoming the default builder platform in the Department of War. Uniformed service members, primes, federally funded research and development centers, all in Maven, Vantage, Envision, Warp Core, and more, all building, not just consuming AI applications. We're seeing green suiters and blue suiters building their own agent swarms to transform how they fight. As with any good revolution, the innovation is coming from the edge, not the program offices. It's the E4 in Hawaii, the E8 in South Carolina. These are the folks pathfinding how AI is transforming the Joint Force with every code commit they make. Gotham's new suite of integrated capabilities, platformed on Foundry, met their moment. Kairos for integrated planning and sync matrices, Nexus for dynamic command relationships and unit task hierarchies, and Workbench to automate collections, fires, and battle damage assessment. These aren't 3 standalone capabilities. There are 3 new dimensions of the prism that turn battlefield complexity into lethality. They all work together, building on each other. Warp Speed continued to build momentum across American industry. ShipOS was the most significant development in Q4, rolling out Warp Speed to accelerate submarine production and sustainment across shipbuilders, shipyards, and critical suppliers. At one shipbuilder, we took planning from 160 hours of effort to 10 minutes. At a shipyard, we took material review from weeks to less than an hour. But most exciting to me is proving what we always believed to be true, that AI will create jobs. This is Jevons paradox in action. By reducing the deadweight loss of time spent planning and ensuring the availability of materials, one of our customers was able to add a 3rd shift. because now there was more work waiting to be done that was shovel-ready and executable. We've been so impressed with the latent talent in the submarine industrial base that we're launching an American Tech Fellowship exclusively for them later this month. This will be an 8-week course to upskill users at suppliers and shipyards so they can build their own AI applications, unleashing the profound domain expertise to accelerate the delivery of one of our military's most important capabilities. Other warp speed wins, one customer making a mature weapon system at full rate production was able to improve root cause analysis coverage from less than 20% to over 99% in less than a week. On the other end, a different customer making a brand new weapon system that is still constantly changing designs was able to see a 40x improvement in throughput with a production system that scales with the design velocity rather than breaking under it. With that, I'll turn it over to Dave to talk us through the numbers.
Thanks, Shyam. We had an exceptional fourth quarter with our Rule of 40 score increasing 13 points quarter over quarter to 127. In the fourth quarter, we generated our highest ever reported revenue growth rate of 70% year over year, exceeding the high end of our prior guidance by over 900 basis points and representing a 3,400 basis point increase compared to the growth rate in Q4 of last year. Full year 2025 revenue grew 56% year over year. On the strength of our 2025 results, we are guiding the full year 2026 revenue of $7.190 billion at the midpoint, representing 61% growth year over year. We reached another billion-dollar milestone in the quarter, with revenue from our U.S. business surpassing $1 billion for the first time. Accelerating demand for AIP continues to drive the outperformance in our U.S. business overall, which grew 93% year over year and 22% sequentially in the fourth quarter. Our U.S. commercial business grew 137% year over year and 28% sequentially, and our U.S. government business grew 66% year over year and 17% sequentially. We delivered these outstanding top-line results with expanding profitability. In the fourth quarter, we generated $798 million in adjusted operating income, representing a 57% margin and exceeding our prior guidance by 500 basis points. Full year 2025 adjusted operating income was $2.3 billion, representing a margin of 50%, an expansion of 1,100 basis points compared to 2024. We generated $2.3 billion in adjusted free cash flow for the full year, representing a 51% margin and 82% growth year over year. Turning to our global top-line results, fourth quarter revenue grew 70% year over year and 19% sequentially to $1.407 billion. Full year revenue grew 56% year over year to $4.475 billion. Fourth quarter U.S. revenue grew 93% year over year and 22% sequentially to $1.076 billion. Full year U.S. revenue grew 75% year over year to $3.320 billion. Excluding the impact of revenue from strategic commercial contracts, fourth quarter revenue grew 72% year over year and 19% sequentially, and full year revenue grew 59% year over year. We closed our highest ever quarter of TCV bookings at $4.3 billion, up 138% year over year. This eclipses our prior highest quarter of TC bookings just last quarter by over $1.5 billion. Customer count grew 34% year over year and 5% sequentially to 954 customers. Revenue from our largest customers continues to expand. Fourth quarter trailing 12-month revenue from our top 20 customers increased 45% year over year to $94 million per customer. Now moving to our commercial segment. Fourth quarter commercial revenue grew 82% year over year and 23% sequentially to $677 million. Full year commercial revenue grew 60% year over year to $2.073 billion. Excluding the impact from strategic commercial contracts, fourth quarter commercial revenue grew 86% year over year and 24% sequentially, and full year commercial revenue grew 65% year over year. We closed $2.6 billion in commercial TCV bookings in the fourth quarter, representing 161% growth year over year and 83% sequentially. AIP continues to drive existing customer expansions and new customer conversions in the U.S. Fourth quarter U.S. commercial revenue grew 137% year over year and 28% sequentially to $507 million. Full year U.S. commercial revenue grew 109% year over year to $1.465 billion. Excluding revenue from strategic commercial contracts, fourth quarter U.S. commercial revenue grew 142% year over year and 28% sequentially, and full year U.S. commercial revenue grew grew 113% year over year. In the fourth quarter, we closed $1.3 billion of U.S. commercial TCV bookings, representing growth of 67% year over year. In 2025, we closed $4.3 billion of U.S. commercial TCV bookings, a 161% increase from last year, highlighting the accelerating demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 145% year over year and 21% sequentially. Our U.S. commercial customer count grew to 571 customers, reflecting growth of 49% year over year and 8% sequentially. Fourth quarter international commercial revenue grew 8% year over year and 12% sequentially to $171 million. Full year international commercial revenue grew 2% year over year to $608 million. In the fourth quarter, we closed $1.3 billion of international commercial TCV bookings, driven by long-term renewals that we signed with several long-standing international commercial customers. Revenue from strategic commercial contracts was $2.1 million for the quarter, representing 0.1% of overall revenue. We anticipate first quarter 2026 revenue from these contracts to between $1 and $3 million, compared to $5.1 million in the first quarter of 2025. We anticipate 2026 revenue from these contracts to be less than $7 million, or less than 0.1% of full year revenue. Shifting to our government segment. Fourth quarter government revenue grew 60% year over year and 15% sequentially to $730 million. Full year government revenue grew 53% year over year to $2.402 billion. Fourth quarter U.S. government revenue grew 66% year over year and 17% sequentially to $570 million. Full year U.S. government revenue grew 55% year over year to $1.855 billion. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. Fourth quarter international government revenue grew 43% year over year and 9% sequentially to $160 million, bolstered primarily by our continued work in the UK. Full year international government revenue grew 47% year over year to $547 million. We closed our highest ever quarter of TCV bookings of $4.3 billion, up 138% year over year and 54% sequentially. On a dollar-weighted duration basis, TCV bookings grew 166% year over year. Net dollar retention was 139%, an increase of 500 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q4 of last year as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the fourth quarter with $11.2 billion in total remaining deal value, an increase of 105% year over year and 29% sequentially, and $4.2 billion in remaining performance obligations, an increase of 144% year over year and 62% sequentially. In the fourth quarter, we signed a few significant long-term renewals with long-standing international customers, which provided a tailwind to RPO growth. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 86% for the quarter and 84% for the full year. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $798 million in the fourth quarter, representing an adjusted operating margin of 57%. Full year adjusted income from operations was $2.254 billion, representing a 50% margin. Q4 adjusted expense was $608 million, up 5% sequentially and 34% year over year, primarily driven by our continued investment in AIP and elite technical hiring. Full year adjusted expenses were $2.221 billion, up 28% year over year. We continue to expect expenses to increase in 2026 as we remain committed to investing in the product pipeline and the most elite technical talent, all while delivering on our goals of sustained GAAP profitability. Fourth quarter GAAP operating income was $575 million, representing a 41% margin. Full year GAAP operating income was $1.414 billion, representing a 32% margin. Fourth quarter GAAP net income was $609 million, representing a 43% margin. Full year GAAP net income was $1.625 billion, representing a 36% margin. Fourth quarter stock-based compensation expense was $196 million, and equity-related employer payroll tax expense was $27 million. Full-year stock-based compensation expense was $684 million, and equity-related employer payroll tax expense was $156 million. Fourth quarter GAAP earnings per share was 24 cents, and full-year GAAP earnings per share was 63 cents. Fourth quarter adjusted earnings per share was 25 cents, and full-year adjusted earnings per share was 75 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 127% in the fourth quarter, a 13-point increase to our Rule of 40 score from the prior quarter, and our 10th consecutive quarter of an expanding Rule of 40 score. Our full-year Rule of 40 score was 106%. With our 2026 revenue and adjusted operating income guidance, we are guiding to a Rule of 40 score of 118% for the full year. Turning to our cash flow. In the fourth quarter, we generated $777 million in cash from operations and $791 million in adjusted free cash flow, representing margins of 55% and 56% respectively. For the full year, we generated $2.13 billion in cash from operations and $2.27 billion in adjusted free cash flow, representing margins of 48% and 51% respectively. We ended the quarter with $7.2 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q1 2026, we expect revenue of between $1.532 and $1.536 billion, and adjusted income from operations of between $870 and $874 million. For full year 2026, we expect revenue of between $7.182 and $7.198 billion, U.S. commercial revenue in excess of $3.144 billion, representing a growth rate of at least 115%, adjusted income from operations of between $4.126 and $4.142 billion, adjusted free cash flow of between $3.925 and $4.125 billion, and GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Well, welcome to our earnings call, celebrating one of the truly iconic performances in the history of corporate performance or technology. Just to underscore some of the numbers that Glazer read in a kind of dry form, which is very hard to do. This company grew 93% in the US. We had an aggregate growth of 70. Yes, that's a 70 handle. We have a Rule of 127, and we are guiding to 61% growth this year. Now, those results would be stellar, unusual, and sublime for a company that was in a much earlier stage of its development. But we have been doing this for quite a while, and you just cannot expect a company like ours to perform at anything like this level. At the beginning of last year, we were guiding to roughly in the 30%, which would be a stellar performance for a company. At the end of the year, we grew our company almost 20% in one quarter. If you were a company sitting in continental Europe or in Canada or in any other similarly situated country, and you grew your whole company 20% and you had a Rule of 50, you would be one of the premier companies in your nation, if not in your continent. And we also did this while supporting in critical manner some of the most interesting, intricate, unusual operations that the U.S. government has been involved in, many of which we can't comment on, but were the highlight of last year and were highly motivating to all of us at Palantir. And so this really just raises the question, what do bombastic numbers like this mean? Because, you know, if you're growing a company like ours at 40%, you would then say somehow this is tethered to a broader category, which is doing well. But with a Rule of 127 and 70% aggregate growth, 93% growth in the US, you really have to look at this, and the numbers speak very volumes that we are an N of one category of our own, and we are doing things unlike any other company has done, which is, of course, been confounding to people over the years because they said we were a services company when we were doing FDEs. They said that our products were somehow merely software. In fact, they are implementation and orchestration machines. And no one thought we'd be able to generate this kind of revenue while having an anemic and declining sales force. And this obviously has import for the world. And what does it mean for the world? Well, it means that first of all, that the way in which we view value is obviously no longer relevant, that the bottom of the stack somehow is where the value is lessened, and the top of the stack, where we impregnate the world with AI, with ontology and FDE and tribal knowledge as represented at this table, is actually where the value is created. And that value is so large and so disproportionate that you can create a company that seemingly is exploding in terms of growth and quality of growth. It also means the riff we've been saying for years, that it's chips and ontology, meaning investing purely in commodity products, LLMs that are not orchestrated. Of course, it not only ruins the unit economics of your business, but it also provides the market with a very distorted view of what value creation would mean. Because obviously, if you're making revenue with no way of making profit because the cost of it is so high, that's not valuable. And obviously, if you're producing something that is the same thing everyone else is producing, it's obviously of de minimis or no value. So we've inverted the stack. We've proven that the investment in what we've done is with small numbers can have disproportionate impact both on top and bottom line. And there's a real hesitance to adopt these kind of products in the West outside of America. And the two places leading here are China and America. And what we're seeing in America is so widely divergent. And so the non-adopters, the have-nots, are hoping for a catch-up function. But these numbers are a breakout function. With these numbers, you have broken through to a new category. It is not the category. The basket of category of AI is actually meaningless. It's the basket of category of performant value creation with the tools we have at hand, of which AI is crucial. And to believe you can go and build companies without this is supremely dangerous. And we're going to see over the next year companies that adopt things that actually work. We know ontology, FDA, orchestration is explosive and revolutionary. And obviously, companies cannot be expected to perform at this level because this is truly historic. But how do you even perform at half this level is going to be a real question for tech companies and a real question for countries. Can we produce companies that are producing what we produce in a quarter in a year? And one of the things we've got to figure out in the West is how do we do this? And this is putting enormous political pressure on our institutions because obviously political leaders struggle with how do I provide value when there's a disproportionate have and have not. Now, in the Palantir version, the haves are the workers and the people that know how to actually use these products. And even the ground truth of this is so far away from what people intuitively believe. It's actually not the capitalists against the workers, it's the capitalists and the workers. But that's very confounding to political leaders. And it's confounding to structures that don't know how to adopt this and cultures that are not producing these kind of products. Last not least, these numbers are extraordinary because they're fully organic. They're not just organic because we don't do acquisitions. We don't do acquisitions because we are a thick, dense culture, which means you'd have to fit in. And we have the perfect excuse now of not being able to do them because no one has numbers like this and it would reduce our numbers to do acquisitions. But they're also fully organic in the sense that we have no intertwined economics. Palantir has direct relationships with our clients in defense, intel, and commercial clients. We are not co-investing. We are not investing in commodity products. The numbers are pure. The purity of the Palantir enterprise and the courage of the enterprise. And we have lots of debates internally about what we should do, how we should do it. But from the beginning, we have stuck to our very strong values of expanding what we believe is the noble side of the West, which means being lethal on the front end, meaning outside against adversaries if necessary. Hopefully adversaries do not want to mess with us. And on the inside, meaning domestic institutions, intelligence institutions, essentially taking an incatenation of the Fourth Amendment, which is completely represented by our pipelining, foundry, and impregnating institutions with it so that every institution that uses our product is doing it within conformity of the law and the ethics of America, and hopefully a logical extension of those around the world. Thank you.
Thanks, Alex. We'll now turn to questions from our shareholders before opening up the call. We received a question from Jeff J., who asks, how are you thinking about your international business, and do you anticipate reacceleration in the near future, for instance, due to European rearmament?
Well, Shyam and Ryan should comment on this, but one of the big difficulties outside of America, including the allies, is, and again, as these numbers show, it's not how much you spend, it's with whom. And so we're currently, first of all, Palantir is in a unique position where we really don't have the bandwidth to do anything that's difficult outside of America. So, and as this learning curve goes on, it's more and more difficult to help people understand how to implement these things. And the demand in the US is so great. But the core issue for our allies is going to be, can we get to a point where there's a clear recognition that you're going to have to buy products that are much, much more advanced than what is being built domestically? And that's complicated for them because they tend to want to buy products from themselves. But if you just go back to a wider frame, is this institution load bearing? Is the purchasing structure of a European country actually allowed to bear the load of buying the best product? Can they understand the delta in a way that allows them to make a decision that might go against the narrow economics of their own country? And I think, unfortunately, what you see is you see in the Arab and non-Arab Middle East, so Arab countries in Israel, you see adoption, you see wide-scale adoption in China, and you see a lack of adoption in Canada, Northern Europe, and in Europe in general. But the real difficulty for the world is, if Palantir is going to bear a lot of the weight of this work, we are scaling. I mean, Shyam should talk about this, but like the demands on our product in the U.S. government in defense and in civil are extraordinary. So how do you in fact even justify moving into something that's more complicated is a real issue. And again, but the issue ends up being their issue more than our issue. I think one of the things you're going to see in Northern Europe, Canada, and other places is a real pressure to move to the left and right politically very far, because the way you deal with this, when you don't have an answer to a question, you come up with ideologies that make no sense and you try to implement them. And then that's the pressure they're going to have. The pressure we're going to have as a company, as a country, is how do we actually service the demand at the unyielding level of quality that we demand from ourselves? And the bar at Palantir is not we're the best, it's that it's got to be magical. We're not in the business of delivering the best products. We're in the business of delivering magically projects that are magical on the front line. And we unfortunately can't talk about some of that, but we've seen that in the last year. Magical implementations that have actually changed how people view U.S. deterrence. Obviously, the primary heroes here are the warfighters, but the implementation orchestration, which Shyam and many, many people at Palantir have spent tireless nights working on, has actually changed what people are able to do. If you have any questions about this, you can actually go, if you speak or read French, go into the French newspapers. One of the countries that has the clearest idea of the problem is France, but they don't really know how to solve it because solution involves buying American products, particularly Palantir.
Nothing to add to that. That's great.
Thanks, Alex. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. Can you hear me? So 2 questions as usual, one in the commercial side, the other one on defense. On the commercial side, the markets have already decided that 2026 is the show me story for AI. Have you seen that in the customers or software partners? Like you talk about this, I think you call it hesitancy, but like over time you have talked about like this resistance from some corporates to implement AI the way you thought it was the right way. Have you seen a change on that dynamic? The other one is related to ship OS. Shipbuilding has not been the only thing that the Pentagon has struggled to ramp up. There is a major effort to reindustrialize the US, and especially the military related stuff. But like, is there an opportunity to have like, I don't know, an ammo OS or a missile OS, and like where else we could see that applied?
So I would say our whole commercial go-to-market strategy is showing and actually delivering value impact to our customers directly as quickly as possible. And that's why we're seeing the stories of customers that are starting at larger sizes and expanding more quickly. We closed, in our overall business, we closed 61 deals over $10 million. That's because of the impact that we're delivering to customers. And the customers are, I'm having a lot of those conversations with those customers, and it's all because we're showing them what we can do with the software, and we're showing the impact, and we're the only one that's delivering that leveraged impact from the models with the ontology, with the FD, with our products in those organizations.
Again, here you'd have to disambiguate America from all other markets, but in the American market, we have inbounds where people have already seen proof points at other companies, and not on one use case. It'll be like migration of this kind of product, underwriting, a myriad of use cases. And the conversation 2 years ago was much more, I've heard you're kind of this weird thing that might be able to make it work. In general, the conversation now is, I've heard you made this work. I don't understand where you fit into a slot. The reality of Palantir is we're not a one slot company. So it's like, if you want to view us, what people know us for is it will work, and it'll work really well, and it'll be very quick. And then, but a lot of our customers come now with, I know it'll work. What do I need to do to make this accelerate? And then on the end where it's like not as positive, it might be, I don't quite understand how this would work or why this would work. But there's a lot less of that. And quite frankly, we're in a much better position to shape who we work with than we've ever been. And part of what we're doing, quite frankly, is shaping who we work with. Because, like Ryan is sitting on one of the more interesting deployments, both technically and commercially. And the person running that deployment on their end de facto is the CEO. And they're very far in the weeds. And it's like, and they're like, they've reshaped their org to absorb our product. And like, we've never had anything like, and it's the same thing. Shams should talk about this in the DoD, but it's not. One of the unusual things that unfortunately we can't talk about is also just how much we can shape what's going on under the hood, including like, how do you orchestrate something in a defense or civilian context? Now, it's not that we're the deciders, but it is the first time that we can help shape the footprint against which we execute. Not in all cases, but for the first time in many. And what we need to get done this year is to expand that. It's much more density of client base than volume. We're into transforming large institutions and then making a lot of money with them. It's very counterintuitive, but because of that, they see very deep alignment, and they're willing to listen to us when we say, yeah, we know that won't work. Like in the past, we had to show them it won't work. Now, a lot of our conversations are, look, we know this won't work. Everyone thinks this will work. This is some BS that companies tell you. It's never going to work. If you want the event planning and the steak dinner, you can have that. And quite frankly, some companies are like, yeah, we have some part of our company that's not real. We'll use some other company that does event planning and steak dinners for that. And then we're part of the real part of the business.
And on defense and reindustrialization, obviously reindustrialization is something we've been talking about for the better part of 2 or 3 years now. It's something we're very focused on. It starts in defense, but I think it goes to pharmaceuticals, it goes to chain reaction, where we're helping build data centers. So like there's so much activity there that we're uniquely positioned to go after.
Shams being overly modest. Shams' phone rings off the hook all day. And what they want from him is, how do I do this same thing across government? That's literally what's happening.
And that's what it's. Ship OS, of course, we're starting with the subfleet, but people are asking us to help with all sorts of different weapon systems, fighters, bombers, surface vessels, drones, weapons themselves, munitions. And it's a big area for us that spans not only the production of the weapon, but also sustainment of them. And if you think about lethality, the ability to deliver combat power, you need an integrated ability to do this from the factory floor to the foxhole. And Maven is a huge investment that has changed how we fight across the joint force on the foxhole side. And what we're doing, that Ship OS is really the kernel of, and is powered by warp speed, is how we're going to reinvigorate the factory floor and provide an integrated view to the Pentagon through this.
Thank you. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Hello. Yeah, so great to see you again. And look, obviously a phenomenal quarter. My question is, does it feel like you're getting more and more of the budgets on the commercial as well as even on the government defense side, where you go in to do X and all of a sudden instead you're doing Y? Is that starting to happen now? You're just getting a bigger piece of these budgets when Palantir comes in?
Well, if you look at you look at our numbers very closely, what you will see is inexplicable growth in revenue, but not inexplicable growth in customers. And it's inexplicable growth in revenue because customers that are serious are putting a lot of their most important problems in our hands. And then the value creation, we're downstream from that, but the value creation is so large. So it's both, it's not just that you get more problems, it's that you solve them in a way that is determinative for the business, and then they pay you a lot more. And then there's also just this consensus, right or wrong, that the alternatives to us are not great. It's like, I'm constantly, before these calls, I get 50 texts, could you please be more modest? And it's an issue. But we struggle, we all struggle with something. But the thing is, I think the true answers to this, it's not like, I don't understand this false modesty of like, the customers we work with know that we know things other people don't. And we've been sticking to the way we do things for a long time. And now AI has just put gasoline on all this tribal knowledge we have in our products. And I would say, and then we're much better at actually, I wouldn't say being modest, but saying you may be a customer or a country that's not getting this right now, like Western Europe. I'm very pro Western Europe. I've been admonishing Germany in German to like wake up because I care, not for commercial reasons. But the reality is most people there are not, they're not ready. So it's like, we're in a position to say, yes, you understand what we can do. And this is how it would work. The best examples are in all the stuff Shyam is doing and other people are doing in government, which cannot be talked about. But the initial discussions are like, well, how would you shape the problem? No one's, it's like, that's what people want from us. Because like our weapon software is in every combat situation I'm aware of. Now, maybe the more people with higher clearances are aware of some things we're not involved in. So, and people say, well, this should not have worked, and it did. And then on the commercial side, which is, I think, of great interest to investors, I mean, that's why we have, that's why we have a rule of 127. That's why we're growing 93% in the US. That's why our guidance is at 61%. It was at 31% last year at the beginning of the year, something like that. So it's like, it's because we have a very tethered and deep and dense proximate relationship with the leaders in almost every field of industry. And last, adjacent to your question, but is like, and these relationships are not circular pay relationships in any way. It's like, we provide value. I mean, not that it comes up very much, but I used to tell people all the time, just imagine we're a Swiss company, but you have to pay us a little more. Like, we deliver a high value product. We don't want any BS about getting paid. We're not going to give you any BS about why our product didn't work and offer you a steak dinner or event planning event. We're going to deliver, and then we get paid. And we got paid last year a lot. 127, 70, 93. Those are my favorite numbers.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
When we are thinking about what we're building, we are building these things with our internal culture, our defense clients, partners, and with a great thought to people who've put their own money into Palantir. It's just a very important part of why we continue to perform and what motivates a lot of us here, and definitely me. And I hope that you are having a great time when you run into professional analysts who thought we would never be free cash flow positive, we'd never be profitable, we'd never have a 2 handle, a 3 handle, a 4 handle, a 5 handle, and now a 7 handle on our aggregate growth, and the rule of 40 with some unattainable category, although 127 is unattainable by everyone besides us. So I hope you're enjoying the ride. There's always ups and downs, and there are ups and downs for all of us. We've been doing this for a long time, but we're having fun tonight. I hope you are too. And yeah, congratulations.
Thank you. That concludes Q&A for today's call.
Okay. Palantir Q4 2025 earnings. The best quarter this company has put up in its history over the past 2 decades. But that is a sentence I will probably be saying again many times in the future. That was exceptional is not the word to describe it. Incredible is not the word to describe it. That was one of those quarters where, Karp was excited about the numbers, but there was a difference between the last time he was excited. The last time he was excited, he was trying to be like, guys, look at these freaking numbers. This time he was like, guys, look at the numbers. Guys, look at the number. Like, look at these numbers. And I think when you look at these numbers, there's going to be a host of upgrades tomorrow. And I think even Karp recognized that. He was a very calm, composed way of explaining, we are winning. We are the real deal. And you either buy in or you don't. But man, we are not slowing down as a company. Amir, your thoughts on the call?
Well, first of all, even the upgrades weren't enough to get into Palantir earnings. I wouldn't be surprised if banks start paying Palantir to just appear and be part of the earning calls just to, tell a question. But they shared something crazy that I think a lot of people overlooked. In the beginning, they mentioned 2 specific customers and how they increased from Q1 to Q4. So the first one increased by 343% in ACV, which is annual contract value, from Q1 to Q4. The other customer increased 400% within the same year in annual contract value. That is like insanity. So imagine this. So this has been the thesis for the longest time. Like, people have been following Palantir for 4 years. Get the foot through the door, show them the value, and then scale that customer. And we're seeing evidence of that. And they shared something really interesting also, is that answering Mariana, 2026 being the show me the value story for AI, they're like, no, actually that used to be the case. Now customers already know what we can do. They already know that we can create values. They're like, okay, please show us how to properly start to use AI across our business, So they don't have to be sold in the same way that they had been before. And just briefly, the overall sentiment is that everything across, every segment of the business is just booming. And that is, after years of grind. And the results are, speaking for themselves. And I don't mean Palantir's financial results, more like everything is playing out as Palantir predicted, as Karp has been saying, chips and ontology. People are finally coming around to that. People are finding out where, real value is being generated. And it feels like everyone just wants in on it. So people might see like, well, they only closed this many deals. They didn't grow customers that much. But no, like, they are actually saying that they are, how an IPO gets oversubscribed. Like, everyone wants in on like a funding round or an IPO, and it gets oversubscribed. That's what Palantir feels like now. It feels like they are so hot on the market and everyone wants to start to use Palantir. That's why they've been able to break all-time highs in total contract value, RPO, bookings. Everything is just going up, and the demand just seems insane. And for those that already got through and finally get to use Palantir, they seem to be expanding like at insane paces. So those are my, initial thoughts, and we can get into the nitty-gritty later.
Arnie, your thoughts on the call?
You are so right on saying that Carp moved from, look at these numbers, like it's hard to believe that these numbers are real, to, you know what, we know this number actually kick asses. And this is just the beginning. It's like a little switch from being bombastic and enthusiastic to just be confident. They know they are ahead, and they know that the distance between them and all the other players, rather than narrowing, is just widening and widening and widening. So I love this this evolution. There are some details that I particularly liked that I think it's the first time that gave more reference. Like we knew Palantir uses Palantir inside Palantir. I mean, for us, it was quite obvious, but then it was confirmed, so it was nice. But today is the first time they said 97% of Palantir employees actually use Palantir somehow, which essentially is somehow all Palantir employees use Palantir, regardless of the function. That is quite interesting to see, because that connects to the ontology. You have an ontology that is fed literally by all employees, which intrinsically makes the trouble knowledge of the company to keep evolving and become better, better, and better in recommending their own agents, which creates further tribal knowledge, which makes the company even better. And with all this ontology set in place, they are in the position to gradually get rid of useless software, which intrinsically is what Palantir will do also later to the clients. So what I'm learning is to see what happens to customers. Just look at what Palantir does internally on its own. And what Palantir does on its own is just build the software solution they need, so that they can gradually help the clients build on top of Foundry to substitute software that doesn't give that much value. So this was an angle that I liked the additional color on. And in terms of products, I loved how they mentioned again HiveMind, which is the angle that I think will dominate 2026. It's just a premature product. So far, there is not a website neither. It was just mentioned in the past earnings call by Sham. And now they added a little bit more color to that, saying, look, rather than having just one agent doing something, imagine you have essentially an infinite army of agents that can help clients understanding how to execute a business plan, what are the criticalities, how to actually come from a business plan to real execution. And they mentioned this example where they were able to deliver value even from the publicly available data, from a presentation, a guidance. They were able to deploy HiveMind to essentially structure a business plan for the company, knowing that they could actually implement that business plan also, which is essentially substituting what McKinsey does. That's very powerful to my eyes, knowing how much consultants are paid for these jobs.
Yeah, I agree. I think the call also, the examples Sham mentioned in the beginning of the call, just showed so many different testimonials of these companies. I think at one point he said 40xing their productivity, which is just something you don't see. And Dan Ives' question, which is, hey, are you getting a bigger piece of the budget? Carp acknowledged, yeah, the customer growth is not as exponential as the revenue growth, but the reason the revenue growth is exponential is because we're getting a bigger pie of what value we create, which again, that has been sort of the underlying philosophy. The value creation of the software should be proportional to the revenue that they generate. And this is a fundamentally antithetical approach to traditional software companies that want to get the revenue before they provide the value. And that's why I think this company is winning at the level that they're winning at. We got some OGs in the chat. We have GoCarp right here. Again, he has been an absolute gem in this community for many, many years. And the fact that even he is texting me right now, he's like, this call was crazy. He's in the chat saying, what a freaking quarter. It's the fact that all of us that have been around for 4 or 5 years are saying, oh my goodness. Even Davis, who doesn't study the company literally every day like GoCarp does, but he's been part of the story for the past couple of years, and he's kept up with the earnings, and he's even like, this is not real. A 70 handle? And you could tell Carp realized how exciting it was to say we have a 7 handle on our revenue growth. There's no other company doing that. Even NVIDIA is not growing at 70%. So it's exciting. It's very exciting.
Yeah, I imagine why GoCarp is excited, because there was a lot of government talk there. The 40x increase was in was it a new weapons manufacturer that got 40x throughput? The weapon isn't even done. It's like during the manufacturing. And that really tied into, how Trump recently came out and was really frustrated about the low output of government contractors on the hardware side. Raytheon, Lockheed is like, no, you're not going to keep buying back your shares. You're going to actually start to manufacture. You're actually going to start produce things. And that's where warp speed really starts to accelerate the whole building that we're seeing. And the West really needs it, because China far outpaces the West and the US in terms of, raw production throughput. So it's really important to tie, warp speed into that. And that was also one of Mariana's questions. Like, okay, well, shipbuilding, it's one of the various issues that the Pentagon has struggled with. Are you getting inbounds for ammo OS, missile OS, tying into that Trump frustration? And the answer was pretty good. Like, well, Sham's phone is blowing up. They want to know, how do we do this thing, but everywhere? So yeah, I understand why GoCarp in particular is really, really excited. There was also some, I thought it was a strange comment. Maven is at all-time high use. Like,
Yeah.
well, that's
By the way,
kind of to be expected.
GoCarp has been screaming about Maven for the past year now, about how serious it is, and we just got confirmation that its usage is at the all-time highs. I mean, and it goes to show he's a retail investor who's been doing due diligence for the past couple of years to get to this assumption of what the growth would be like in one of the biggest government verticals they've launched over the past 2 years, which is Maven. And now we just got confirmation for the company, which is like, yeah, it really is working.
Yeah, and they also commented CNC. And what I meant by that comment is that, yeah, of course, Maven is going to be increasing. So I just thought that comment was strange. Like, yeah, all-time high. It's to be expected. But they also, one of the new frontiers of, war, which also we almost forgot this. They said that AIP is the default builder platform for the Department of War. And, white collar, blue collar, it doesn't matter. They are not just consuming, they're actually building. So that was a huge comment, actually. But they also shared, in regards to, UAVs being the future of war, that they are deploying Mage. I never heard of that AI agent called Mage. Maybe I've just been out of the loop. But yeah, they really shared a lot about, the government context. And I think that piece of the pie is really, really, really big for Palantir to go after. So really excited about government.
I think GoCarp's already talking about Mage in the chat. He said, yep, I found out what it is. Back in September, I found Mage.
Well, if he
I
found
neither
out in
remember
September
of Mage, so this is like a super niche only GoCarp. So
well, if he found out in September, then us finding out now, that's like a pretty good runway. So that means that, yeah, we're on top of things.
Guys, I think it's fascinating thinking about ShipOS that is essentially powered on warp speed. So what this means is warp speed is like the white label operating system for manufacturing, but then, so it's a platform which then can be declined to essentially all verticals. So
right.
This gives us a sense of how Palantir doesn't only produce a product, but how to think in terms of products. There are these platforms like super generic, like Foundry, but then you build Warp Speed, which is a Foundry for manufacturing, but then you create ShipOS, which is Warp Speed for manufacturing, which is intrinsically Foundry for manufacturing. So it's like
it's
cool
network
to
effects
see
compounding, right?
how by having the basis of Foundry, Palantir can not only expand to many industries, but within an industry, it can go very, 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 very deep. And that's how you create these multi-hundreds of billion-dollar contracts, which all the other SaaS companies that we were mentioned before are not able to achieve because their products are just stupid. They're not meant to solve big use cases.
Let's end it off with a conversation about the stock. And Rob, thank you for the super chat. I think this conversation will get into your question about valuation, OpenAI potentially IPOing at 1 trillion. I think, just my opinion, the stock should be up a lot more than 5% after hours on these results. Quite frankly, I don't know. It's looking kind of attractive only being up 5% after these results. I mean, if we were to dump tomorrow, Arnie, let's just start with you. I mean, do you see any level of a buying opportunity here, given the type of guidance we got, knowing that guidance is going to be beat, excluding the macro, because if the macro takes a shit, then every stock is going to take a shit. But how are you thinking of the price reaction right here?
To be honest, I'm surprised that it's up only for 5%. I mean, considering what we were expecting at the beginning of the call, we were thinking that already with a bit, we would have got more than 10, 15% or even more. And actually, our expectations were completely smashed by these results and the coming results that could happen next quarter, next year, from what were guided. And as we mentioned many times, when Palantir guides something, they have a relatively good degree of certainty of that being a conservative number to be beaten. So my personal expectation would have been, I would have expected definitely more than 15% up, considering that the stock was already beaten down for no real reasons apart from traders just getting out of the AI software trade and just building up positions on the chip side. So what would you deem as a fair movement for the stock after these results?
I agree with you. I think minimum 10%, but Amir, go ahead.
Yeah, I said 20%, as we went into, like, before we actually got the numbers. I think that's about right. It was trading, roughly fairly valued, going into the earnings. But as I mentioned, my expectations for next year, where I say that, well, okay, this is fair value for the company. I had them doing 6.3 billion. They said they will do over 7 next year. And then when you start to extrapolate, 10 years out, like I haven't obviously valued the company with the new numbers in mind, but like this company is undervalued. Like, this is crazy. I don't think people have started to digest everything that was shared today, like the contract balances, everything, skyrocketing, the overall commentary regarding, their demand. I don't think people are digesting this yet. So I'm really surprised about only being up 5%. I wouldn't be like, if it was up 30%, I would be like, yeah, deserved, even though it's trading expensive. People talk about PE, price to sales. They are quickly growing into those, like they're quickly shaving off those multiples. And, when you look 10 years out and I actually do a valuation, I think it's really attractive here. So I will do some work during the day here. It is actually 8 in the morning, so I have the full day to analyze this properly and value the business. And then I'll see. The way it's looking, I'm really interested in buying Palantir here, but of course I'll have to break it down. But yeah, 5% is, I don't think the market gets it.
So
and here's I'll just say this real quick. Here's the most important thing about this. And, when Amir does his models, he tends to go out 5 to 10 years. And so, if you can compound aggressively 5 to 10 years, you can really start to justify some of these prices today. It depends on if you can keep that growth up. But the most important thing is, I think all over the weekend, we heard Palantir to 120, Palantir to 110, Palantir's going under 100. These results were a big, wait a second. If you actually send this stock back down to 120, 110, under 100, there will be buyers before that happens. And then if it actually gets there based on this new guidance, there will be a lot of buyers at those levels, I think, including all three of us. So whether the stock gets rid of the 5 or 7% move yesterday, whether you still think 50 times forward sales is expensive because you don't see them compounding 70% for the next 5 years, the point is these numbers make it really hard now for the stock to actually get to those price targets that everyone's been calling for over the past couple of days. And then for people to not get excited, even if that stock price still has a premium associated with it, because you're actually paying a premium for a company that simply is executing at a level that we've never seen before. So I do think this quarter was really important so that people can know if it gets that bad of a dip, it seems more obvious that that would be a buy the dip.
Yeah, and when you look at, okay, what are they growing at now? We have all these like crazy year-over-year growth numbers. They already guided that they're going to grow even more the coming year. Like they are giving you all the signs that, no, guys, this growth is not going anywhere. It is supported, by the net dollar retention, keep increasing. We didn't talk about this, but the top 20 customers account for 42%. So 20 out of what was the total customer, like 950-ish. 20 of those 950 account for about half. Those half are actually growing a lot. Like the largest
like
customers,
35, right?
Yeah, so the largest customers that Palantir has, the ones that are paying by far the most already, like they are already like dishing out, what was it, 94 million, annually. 42% of the customers, they are still growing 45.5%. Like the largest customers, they're already paying massive amounts. They're like, no, give us more of Palantir. That just shows you that this is scalable from everything from small to medium-sized businesses to the largest corporations in the world, including government entities. Like this is really just getting started still. Like you can look at the year-over-year numbers and be like, oh my God, it can only be, downwards from here. I still think that we're just getting started. I mean, we don't even have 1,000 customers. We just shared about how many customers Snowflake has, 10K or 200K of Salesforce. Like Palantir is just in the beginning of its growth story. I don't think people still grasp that. And the margins, can only keep expanding from here at a faster pace than I think anyone expected. Like certainly faster than what I expected. Yeah, I don't know. This company is, as Karp said, like he's just showing us how magical Palantir is. It's not even about being dominant. It's about being magical. And yeah, it sure looks like magic.
Well, these numbers to me just scream one thing. Sell the shares at your own risk.
Yeah, I mean, when it comes down to what Karp said, it's not about being 10x better. It's about being magical. And I think that's a big thing. They've been talking about value creation for a long time, but this new riff he has about being magical, it's important because you only get this type of growth if you're delivering what feels like magic in the enterprise. And now it's not a question of if the product works, if it delivers value. It's a question of how fast can they keep growing it. Again, I just don't know what else people could have wanted off of a guide like this, which again, they have to guide a little conservative too. And if 61% is conservative guidance, if we look at another 70% year of growth, and if that compounds in 2028 for another 65%, 70%, I mean, we might be underestimating how much they can compound if this AI TAM is as big as it is. And we're also underestimating the lock-in effect based on that question that Mariana said around ship OS-like products within the government and within multiple governments across the world that inevitably will need some type of software to get that type of value, to get that type of magic. And so I agree with Arnie. The stock could fall for a variety of reasons. Macro, the Fed chair might upset the market, but like it's one of those things where if the stock falls after these types of an earnings, every analyst will probably tell their clients, you have to get exposure. And I think there will be a lot of people that finally get a lot more exposure into Palantir.
I mean, go.
Well, I had something, a different topic, so you go ahead if you want to add.
Okay. So I was thinking that the stock is already quite down compared with the analyst price target, right? So if we look at the valuation, which I don't see it right now. Okay, the price target here. Okay, so the stock is already down substantially from the analyst targets of 190. The stock is now at 146. So it's already down a lot. But what I think is inevitable with these results is that all analysts will need to adjust their stock price target, and then by not a small degree. So if you had that price target that incorporated some estimates, these estimates are now like 15-20% better than what analysts were expecting. And this strength gives a lot of momentum also for the coming years, not only 2026, which intrinsically would help the terminal growth value, so the value from the long-term growth to be adjusted, and the margin side, as we mentioned, analysts were expecting the margins to stay flat at 50%, and the company is already guiding and already delivering more than 57%, which gives a sense that probably the company is expecting something north of 60-65% margin. So bottom line to say, it's inevitable that for how analysts work, they are now already updating their models to show, okay, this company deserves more. But this more is already like trading now at a discount compared with the average target. So I think there is a gravity now towards the price targets analysts are sharing. So I personally believe the road to 200 or so is inevitable at this point.
Yeah, I wouldn't be surprised if by next quarter we are around that 200 mark. It's probably somewhere in that ballpark where my new intrinsic value will be. Just some quick maths. But
before today, how much was it more or less?
It is 153. And I have some very optimistic things. Like I have government compounding at 46%, commercial 45%, over the next 10 years. But already, like this year, they beat, like I had 4.3 in the model for 2025. They beat that. At 6.3 next year, they're already guiding to beat that by $1 billion. So I will have to revise everything. And my margins are also a lot lower than what they're actually saying. So operating margins for next year, I have them doing 35%. Like they're already like 40%. So yeah, there's going to be a lot of revisions here.
So if you have a personal expectation, like more or less, what kind of fair value do you think you will get once you will adjust the numbers? Just to see like if there will be a delta between your expectations and what actually comes out from a more rigorous exercise.
Well, we have to reassess, the risk profile of the business, but probably around 200. At 180 to 200 is the range. Probably. I don't know. I can't do the math in my head. I need to.
Come on, I expect you better from me.
Do you think I'm a quant or something? My name is not Yang. What's his? Okay. Changing topics. Karp, while he was calm, he did actually burn some people in that call. So he mentioned that guys, these are organic numbers.
Mhm.
We were not growing through acquisitions, which is a hint at Salesforce, ServiceNow, Snowflake, that have to do like all of these M&A deals to stay relevant. And then he said, which I was kind of surprised, these are direct relationships with every client, both in government and commercial. We are not co-investing, which is a hint at open AI with the whole circular investment thing, where I give you money and then it comes full circle, and where everyone is just pouring money into open AI while being invested in open AI. So it's like, no, these are like actual real numbers. There's nothing funny going on like with Microsoft's RPO, where 40% is OpenAI, but they're actually funding OpenAI to put money back into Microsoft. Nothing funny like that. So he actually burned both the SaaS adjacent names like Salesforce and ServiceNow. He also burned OpenAI and the commodities LLMs. So that
He
was kind of,
literally said, we are not co-investing in commodity products.
yeah. So that was directly at OpenAI. I was like, damn, bro.
Well, it was really important for him to say that. I mean, again, part of investing in Palantir, and I think a lot of people have forgotten about this because they get so wrapped up in the controversy around the company or the valuation, is like, you need a communicator who can actually get people to care and be excited. And on this call, I think Karp did an incredible job telling people, this is not M&A. We don't acquire companies to grow like the other people that complain about our sales multiples on live TV all the time. This is not like we're giving you a PowerPoint or a steak dinner under the table and you like, this is, we show value, people reciprocate. It's that simple. And quite frankly, this is the hardest thing to do in life in general, to be compensated appropriately because you deserve the compensation. And in business in particular, we've seen many times businesses, whether it's a very small business or a public company, try to sidestep the actual reason they should be earning money. And as a result, EPS for shareholders, net income, is by delivering something valuable to the marketplace. And Palantir has shown they can deliver something valuable. If you usually deliver something valuable, you can exponentially grow that value. And then if you can communicate why that value is so important, you end up getting a lot of people to pay a premium to be part of your story. And so I think in a world in which SaaS is being seen as dead because of AI, in a world in which AI itself is being called a bubble, in a world in which the macro gyrates every other second based on a Trump tweet, the one thing that is consistent is that Palantir will provide value, and that will show up in the numbers. And if that continues to happen, the stock is likely going higher, but it could go down in the short term. And I think a lot of people have to come to grips with the fact that it is not necessarily just based on Palantir anymore. We are in a very complicated market. We have seen what's happened to companies like Microsoft that have absolutely dominated earnings and they lose 400 billion in market cap. So to be honest, I think it should be up 10%, but I'm happy the market is at least recognizing it's good enough to give it some juice after hours, because it's a very dicey market right now. But the truth remains that they're providing value, and the more value they provide, the more that should help the company long term.
Do you think Palantir numbers will break the narrative, the trade that traders are currently deploying of short AI software just belong AI chips? Or will Palantir will be a beast on its own, essentially diverging in terms of performance from all these other players like ServiceNow, Microsoft, and so on?
Well, I think Karp kind of commented on it. I don't know if it was, if he said it specifically towards that, but he said like they are like a breakout function. They have broken through to a new category, and he explicitly said the AI basket is meaningless. It's all about the basket of value creation, and that's what matters. And so if I kind of feel like Palantir stands on, like it's one of one, right? Like they stand on their own. They shouldn't really be bunched together with, all these other SaaS names, because they're clearly doing something different. And they're clearly differentiated. So I don't know if you like chips will rotate all into Palantir, because as he said, like chips are actually valuable. Chips and ontology, right? That's what he keeps saying. So probably won't be like a rotation out of chips, but hopefully Palantir will be included in that trade upwards as a separate category, the category of value creation.
All right. I am linking Amir's YouTube in the chat. Please make sure to follow him and subscribe for more content, not only around Palantir. I'm sure he'll have a Palantir valuation update video soon, but also around other stocks that he values. I am linking Arnie's Twitter in the chat. You can follow him as well for more updates. Thank you to everybody who has once again spent another quarter with us to analyze Palantir earnings. We hope to be doing this for a very long time. It never gets old. It's been, I think this might be our 18th quarter together. And, when the company puts up numbers like this, it really makes it fun to keep covering the company and continue. But we were there covering it when it wasn't fun, and I think that's why we've gained the trust of a lot of people. And that's why so many people across the world come together to believe in this company. I mean, again, Luna, she was at the meetup yesterday. Just so many people that I met in New York, and so many people that Arnie and Amir have been able to meet online and in person. Arnie and all these different events that he goes to of people that have had their lives changed because of this company. And not just because they bought in at 7 and the thing went to 150, but that's a big part. That helps a lot. But also because of the purpose it has given them to find a community of like-minded individuals that have actually turned into best friends. It's really rare. It doesn't happen often. It really doesn't happen often for a company to bring that many people together. The only other company in history that I think has actually done that is Tesla. It's created an online community that has turned into real lifelong relationships for so many people. And it seems like Palantir is just getting started on that journey. So we really appreciate everyone being here every time.
Yeah, thank you so much, everyone.
Arnie, yeah, any last thoughts from you guys?
Thank you, everyone, for sharing this journey. It's quite impressive, and I would give a big clap to Amit for the meeting you just had, because bringing up so many people that are passionate, good people, all together is not something easy to do, but speaks a lot of how people genuinely care of you. So I think that's impressive, and having more than 10,000 people at a certain point on the stream was just wow.
Yeah, my channel had over 1,000. That has never happened. Like, I'm typically like 50, 60 people. I had 1K plus. I was like, whoa, what the fuck? Like, I was overwhelmed. So thank you so much, everyone. It's like the Palantir family is truly unique in that regard. So thank you so much, everyone. And looking forward to the next quarter, where we will have our minds blown once again with even the new best SaaS numbers.
Some could sound quite obvious, but through this journey, I'm really learning how keep compounding knowledge on stuff that you care literally builds an unfair advantage. And by sharing opinions with people that care, and I believe the exchange we had across these quarters, years now, has been literally insanely valuable, because that helps us understand the company better, the nuances that only other people that have this compounded knowledge over time can have, so that when there are some hints like the analyst that has been super bearish immediately flipping, that's an information that matters. It's not, just another update. And having this kind of awareness on a company that is both exciting as financial numbers, it is exciting for the mission, it's exciting for the corporate culture, the leadership, makes everything just better.
Agreed. And we can't do this without people being here and being part of the community. This is not fun to do, and this literally isn't possible if other people across the entire world don't care about this content. So we are very happy to be doing this. We'll be doing this for as long as possible. And this was a big one. This was one of those quarters, which probably will be topped in the coming months. So thank you, everybody, for being here. Congrats to everybody on the quarter. And we will see you again next time. And I'll be back tomorrow for the market open.
And remember, before going to sleep, have a read again of a Carp's letter.
Yes. Read the letter again, or just roll back the video and listen to me speak it. Maybe it'll help you fall asleep a little bit as well. Thank you, everybody. Appreciate it. We'll see you guys next time. Bye.